Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Failure of both monetary and fiscal policy is that the money isn't getting to the right people.
I think we're going to be stunned by the degree of earnings upgrades.
Monetary policy looks like it's pretty much on hold for a long period of time.
The numbers this year don't really tell us as much as we need to know about the future.
We've never had these kinds of numbers before. We've never had these trajectories.
It all comes back to the Fed. The Fed is very concerned about the outlook, whether it's L-shape or U-shape.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance, Jonathan Ferro, Lisa Abramowitz, and Tom Keene. What a day. 5, 6, 7 major stories, themes that we're driving into October. Of course, claims tomorrow on another 800,000 jobless and a key economic data. But, John, just simply an open question to you with all that's going on. What has your eye this morning?
The Italian bond market, and I know that feels a little bit off the beaten road at the moment, Tom, but right now just rallying aggressively over the last couple of weeks. And we look at the spread of BTPs to German debt at the moment, that's about 120 basis points. That was as wide as 280 earlier in the year. That spread has just compressed, particularly over the last couple of weeks. That's one to watch, I think, in the debt market, Tom.
And that's bond price up, yield down as well. What's the why? Is it a flight to quality? Is it a flight to what?
Anticipation of more QE, perhaps one point. The other is reduced redenomination risk. And I'm not sure we're completely there yet, where we can say that this market now trades like a proper sovereign. What that means, Tom, we used to question how long some of these countries would stay in the Eurozone. The risk of redenomination, moving out of the euro, the single currency, and being repriced in a different one. The fiscal backstop of a couple of months ago, that Brussels deal, even though it's not been fully implemented, I think that gave some people the confidence that we have that now, and we've at least taken a step forward.
Let's redenominate over to the American scene, and Lisa Abramowitz, it is in Washington as well. What a difference. I just see from day 21 of the election, Lisa, from day to day 20 today, boy, did it heat up in the last 24 hours.
Yeah, and markets are responding in tandem with the different headlines. You see stocks vacillating here. What I find interesting, just to build on what John was talking about, this bid into credit, even though it's uncertain what the future has to have with respect to the economic prospects, credit in the U.S. spreads, the extra yield that investors demand to own high-yield debt has fallen to pre-pandemic levels, even for the lowest rated junk bonds in the U.S., even as we have a lot of clouds overhanging here, even though the situation arguably, and frankly, if you just look at the unemployment picture, is much worse than it was earlier in the year. Tom, it just raises a question. How much is this fundamentals and how much is this just a matter of the central bank fire hose of cash?
Well, as John Ferro mentioned, a debate tomorrow. It is not there. The data, simply red and green on the screen. It's been a churn higher earlier, but we've come back on a churn to the markets right now. I'm not going to spend a lot of time on the data. Dollar weaker a little bit, and the 2-10 spread comes in from 61 basis points. A little bit of flattening over the last 2 days. Goldman Sachs out with really quite good earnings, popping over 2%. There's been any number of other bank earnings, but one of them that John Ferro mentioned was Wells Fargo. They are so distant from the romance of the stagecoach. Right now, it's about survival and the reconstruction of the San Francisco Bank. Shonali Basak joins us, our chief Wall Street correspondent here on Wells Fargo. What is different here, Shonali, about Wells Fargo? Where are they in that restructuring process?
Slow and painful in the middle of it, Tom. We see the efficiency ratio here above 80%. Compare that with Bank of America at 71%. They have a lot to do in terms of cutting costs. We already know they're cutting jobs. They're cutting people at every rank, the highest ranks at the bank. You have Charlie Scharf, of course, of former J.P. Morgan fame, former Visa fame, coming in here and putting in his own guard, though that change is slow, and investors seem to try to be giving Wells Fargo time, and we know there are the bulls and there are the bears for the Wells Fargo story.
Shonali, we've heard from 4 of the 5 big banks on Wall Street now. There's always a theme. What's the theme so far?
I would say costs, actually, John, because if you think about it, they all have been helped by, and Charlie Scharf even said so in the press release. We've been helped by monetary and fiscal stimulus. How long does that gain last for? They have other pressures on their top line, but their costs are bloated. And some of these banks, we know, Bank of America, Morgan Stanley has committed to keeping people on through the end of the year. So where do they reduce the bottom? Where do they add changes there to expenses, and where does that go into next year? Are we going to see a massive pains in terms of headcount reductions next year?
Read layoffs. That's what headcount reductions will translate into. There is also a question about whether some of these banks will increase lending, given the fact that there is so much support on the fiscal side. We've known they've been tightening standards, reducing credit available to some smaller businesses, Wells Fargo doing the same. Any sign of what the future holds on that front, given some of the pressures that we're seeing?
Yeah, I'm glad you asked, because that data is very, very hard to find, Lisa. But when you look at the loan officer surveys to the Fed, it shows you that they are planning on reining in lending here. They are worried about the future, and we will see charge-offs into the end of next year. So the little guys might have a tough time finding a loan tomorrow.
10-year return, Wells Fargo, 1.9% a year. Wow, what a train wreck. Sonali Basak, thank you so much. Right now, Andrew Sheets joins us with Morgan Stanley. Always wonderful to have him on, truly on the dynamics and correlations of the market. Andrew Sheets, is the equity market alone here, or is it other markets that are adapting and adjusting to the expectation out there?
Well, good morning and good to be with you. You know what I think is pretty fascinating about both the equity market but a lot of different markets is that, the headline levels speak to quite a bit of optimism. We're back near the highs in the S&P 500. That would clearly suggest a quite optimistic outlook on the economy and events. And yet, I think across a lot of these markets, you still have a lot of the kind of the micro relationships, the intermarket relationships that reflect a lot of growth pessimism, right? Small caps still trade at a historically large discount to large caps. Yields are still very low. The curve is still very flat. The ratio between high yield and investment grade spreads is still pretty wide. And all those things are what you would expect if investors were less confident about growth, not more confident. So I do think it's a pretty nuanced picture. Yes, the headline indices are high. It's easy to kind of read that as, there's an enormous amount of growth optimism that's come into the market. But actually, I think looking below the surface, what I think that would suggest is there's a lot more confidence, I think, that there's a lot of liquidity in the market. Then there's a lot of confidence and high expectation that growth is going to rebound strongly.
Andrew, I might have misheard you. Did you just say that spreads are still pretty wide?
Yeah, so I know it might have sounded like a misquote. No, if we look at the relationship between high yield and investment grade, that relationship is still pretty elevated in the sense that high yield spreads have come in a lot less relative to higher quality spreads. And even within the high yield market, you still see pretty average levels of valuation gaps between, say, kind of single B credit and double B credit. So our view is and remains pretty constructive on the credit space. Yes, it has rallied in. Yes, there's a lot less value than there was there over the summer. But I think this is an asset class that rarely trades at the average. And I think we're in one of those phases where we're moving from spreads being kind of too wide to probably the next phase being they need to move to being too tight.
All right, Andrew, John Farrow is just setting me up because he wants me to ask you, I'm sure, about the incredible amount of money that's poured into the CCC space and this question about whether we've seen the end of the bankruptcy cycle. In other words, are you saying that spreads are going to tighten because credit quality is perhaps underpriced right now, that basically investors aren't giving the benefit of the doubt to the likes of Carnival and Delta and these other companies that have yet to get back on board? Or are you saying that liquidity will overcome all of those concerns and they won't be an issue for creditors?
Yeah, so I think it's actually a little bit between the two. I think actually would be a pretty common, pretty normal credit cycle to see the market rally and improve ahead of kind of ahead of the peak in the default rate, ahead of the worst of the downgrade cycle. We saw some of that in 2009, 2010, where where the market had largely recovered in 2010, even as there were still quite a few downgrades to happen, even as many companies did go on and default, that the credit market, I think, does have some precedent of moving well ahead of those factors. And so, I guess what I would see it more consistent with is that kind of that normal cycle. That yes, you still will see downgrades, you'll still see defaults, but that the credit market has done, I think, a reasonable job of some differentiation there, and that those events won't be enough to derail the broader high yield market.
Andrew, you're so constructive, you're making Lisa depressed. Can you just tell me what would make you bearish? On a Sunday, when you write that Sunday start note that everyone wants to be on the distribution list for, what makes Andrew Sheets bearish?
Thank you, John.
That note, when it comes out, what changes it?
Yeah, sure. So I do think the case for credit is better than other asset classes. We have less upside to our U.S. equity targets. We have less upside to our emerging market equity targets. I think those are markets that we do think are more fully valued than the credit market is. And I do think if we kind of think through U.S. election outcomes, and I think there's a lot of focus on what's the immediate market reaction to different combinations, but there are certainly combinations where you could inhibit further fiscal stimulus in the U.S. And I think that could be quite problematic. If you had to ask me, what's the broader scenario that would worry me most longer term, it's almost that we have a little bit of a groundhog day with 2010, 2011, where back then we were coming out of a recession, we were coming out of a really bad place. There was a lot of stimulus in the system, and then the stimulus just kind of stopped, and the market focus shifted to balancing the budget, fiscal austerity, and those types of things really slowed down the recovery. And so my concern would be that maybe you go through that again, that you've had this very sharp recovery off the lows in March and April, that actually kind of policymakers take their feet off the gas next year, and the recovery isn't as strong as we expect.
Andrew, great to catch up. Andrew Sheets of Morgan Stanley, and congratulations on the call so far in 2020. Far more constructive than the consensus through this year for an economic recovery. Not just Andrew Sheets, Mike Wilson on equities, Ellen Zettner on the economy in the United States. Chet and I are leading that research. Matt Hornback leading the rate side of things. Tom, quite a call from that team to be much more constructive on this recovery than most.
Absolutely. I mean, they've been on fire, particularly switching from a pretty negative call to positive. John, I'm looking at the Apple 10-year piece. It's yielding 0.63%. I mean, how much room there is there?
Tons.
It's just too wide, Tom. It's too wide. It's not my view.
10-year piece, 0.63%.
I know. We haven't talked about the iPhone yet. We can do that a little bit later. Futures unchanged on the S&P. This is Bloomberg.
With the First Word News, I'm Kaylee Lines. Prospects for another stimulus package before Election Day look bleak. President Donald Trump and Senate Republicans are at odds. The president is urging them to, quote, go big or go home. But Senate Majority Leader Mitch McConnell is only committing to a vote on the paycheck program for small businesses. Meanwhile, House Speaker Nancy Pelosi is demanding the White House revamp its latest offer. She says it's not big enough. Meanwhile, the world's top central banks are urging governments to keep spending. They say that concerns about mounting debt should be put aside until the economic recovery from the coronavirus is complete. The IMF is normally a champion of budget restraint, but the fund agrees that it is too early to end support. In the UK, there's growing pressure on Prime Minister Boris Johnson to order a circuit breaker lockdown. The opposition Labour Party and government scientists say it is needed to get the virus under control. Deaths have soared to their highest level since June. Concerns are mounting that Johnson's new system of restrictions are not enough. And Bloomberg has learned ConocoPhillips is in talks to buy rival Concho Resources. The company has a market value of about $8.7 billion. Conoco is looking to make a big bet on shale in the midst of a historic downturn in the oil industry. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lines. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We know that the economy is recovering, and we're not certain just yet whether the economy can stand on its own 2 feet and continue to deliver these strong credit numbers.
Gerard Cassidy, RBC Capital Markets head of US Bank Equity Strategy, weighing in on the financial results and the help we've had from the government. Wells Fargo, straight up, straight out, just acknowledging that help and attributing the results of this morning to the help they've had on the monetary and the fiscal side. Many others would say the same thing. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 1 hour, 12 minutes out from the opening bell. Your price action shaping up as follows this Wednesday morning. Futures, they go nowhere. Euro dollar 117.55, firmer by 1/10%. I know I just pulled you in a little bit, Lisa.
That was great.
Got you
That was
excited
good.
and
Well
then
done.
nothing.
Yep.
In the bond market, nothing. Yield 0.72%.
Great.
Question of the morning.
Selling it.
Does Tom Keene get the iPhone 12? That is the only question that matters. Is he a buyer or a keeper of what he's already got?
I'm not there yet because this has a great battery. I got it for the battery. I don't know. John, what I will say, and I covered this early this morning, is a chip. The A14 chip is just stunning. The improvement in the underlying engineering of the toy. And you'll see from there, John, I don't, that's my take on it. Alex Webb giving us perspective from London earlier this morning. Right now, on the reality, which is if you're a shareholder of Morgan Stanley and Goldman Sachs, guess what? It's been a lousy 10 years. You compare it to a lot of other things out there. Given all the challenges, it hasn't happened. Fortress Gorman, okay, 8% a year, maybe 10-year return. Goldman Sachs, totally unacceptable, under 4% return per year. Christian Ballou holding court at Credit Suisse and particularly at Bernstein joins us now with autonomous research and their senior analyst. Christian, you are long performance of the last 10 years.
Good morning, Tom. I'll try and help you on Goldman. I don't know if I can help you on the iPhone, though, the iPhone 12. On Goldman, look, I think there are many differences this cycle versus last cycle in terms of business mix. I think the lack of onerous incremental regulation, just generally how well managed these companies are relative to the life cycle. So I do think there are better prospects for both the brokerage stocks, Goldman and Morgan, headed forward. And you've seen that somewhat this year in a recession, in a somewhat tough environment. For example, this morning, Goldman putting up almost 19% ROTCE, which really was best in class relative to the other banks that have reported so far. So I do think, knock on wood, that this time is somewhat different.
I look at this. This time is different. It starts with management. The belief over 10 years, going back to Brad Hintz at Sanford Bernstein, is that, they're really in it for themselves. They're really not doing it for the shareholders. What's changed?
Well, today's results are a really good example of what has changed, right? So, for example, a big part of the really strong results is discipline on compensation. And that speaks to a business that's far more geared towards sort of platform businesses versus people businesses, which allows far more operating leverage. Now, clearly, this is still a talent business, and you still have to, pay up for performance, and you still have to attract the very best. But with the business mix and the focus on efficiency, again, like this morning, they can put up decent results.
Christian, platform business versus people business and efficiency. It screams job cuts. How big will the job cuts be next year on Wall Street?
Yeah, no, look, I think, I think broadly speaking, just generally speaking, you've seen cuts on Wall Street over the last decade for the most part. And as you see automation increase, digitization increase, electronic trading increase, there's probably still going to be, some more cuts. It is inevitable. That said, there are also opportunities that come through. You've seen the likes of Goldman Sachs, for example, recruit far more heavily in engineering type disciplines and technology type disciplines versus what they would have traditionally, 10, 15 years ago. So I do think, to your point, that there will be some headcount rationalization, but I also think there's a lot of opportunities in areas like technology to bring on new talent.
Which bank right now, based on the earnings results that we've gotten so far, are you most impressed by?
Yeah, so I look over Goldman and Morgan. So it would have to be Goldman, I would say, so far. And again, just looking at the returns today, kind of speaks to that. I would say more broadly speaking, if I was kind of thinking about the more broad strategic direction of the companies, we really like Morgan Stanley. I think James Goldman has done a really good job in changing the business mix. They've been very clever in the way they've used excess capital to really remix the business by buying E-Trade and, very recently Eaton Vance. Almost 2/3 of that of Morgan Stanley will come from, capital-light businesses like wealth and asset management. So overall, I would say Morgan Stanley, in terms of thinking about the long term and strategic direction, Morgan Stanley is the stock we like the most.
Kristen, before we let you go, just on the acquisition option, it's an option that's not available for many of the other big banks. It's an option that could be available to Goldman. Why do you think Goldman hasn't gone in that direction?
Yeah, so, look, I think, again, Morgan Stanley is somewhat more advanced strategically than Goldman, right? A newer management team, less in the way of capital flexibility. So I do think they're somewhat behind strategically to Morgan Stanley. And you need to know where you want to go first and be very clear on your direction before you go out and do deals. But I do think they will be in the conversation for acquisitions. They're beginning to build capital now. And they've always spoken to wealth management, asset management, and digital consumer banking as areas that would benefit from scale acquisitions. So I do think Goldman will be in the conversation for acquisition going forward.
Christian, looking forward to getting you back on the show soon. Look forward to it. Christian Bolu there, Autonomous Research Senior Analyst on the banks. Goldman in the pre-market, up by about 2.27% on Goldman Sachs stock. Morgan Stanley tomorrow morning. Tom Keene, 7:30 Eastern. That's when we'll round out the big bank earnings with Morgan Stanley.
To me, it's fascinating. I mean, the last 5-6 days have been really amazing here, talking about the banks into this, and we're in the process of this, the pandemic and how they're doing. And John, I'll be honest, I don't know what to make about it, other than clearly, as Christian just said there, Morgan Stanley has an action vision, and to be honest, we're all looking for action from the others.
I think it's still a wait and see for 2021, Tom, for so many of them. This is the guessing game on the provision side. Then the realised losses come further down the road. But all of 2021 and the trajectory of 21 hinges on what we decide down in Washington, Tom. You don't agree the recovery hinges on D.C.?
I don't know. I'm looking for an entry point on Apple, but I'm also looking for an entry point on J.P. Morgan. I'm just losing as I go.
Apple earnings, 2 weeks tomorrow.
Evergreen quote.
This show. I know. Deep breath. One more segment.
You could do this.
I got it. This is Bloomberg.
कोरोना फैला हुआ है चारों तरफ। इस कोरोना के दौर के अंदर ये प्रदूषण हमारे लिए जानलेवा हो सकता है। एंटी स्मॉग गन्स काफ़ी बड़े स्तर के ऊपर जगह जगह लगाई जा रही है ताकि इसको रोका जा सके, और भी बहुत सारे कदम उठाए जा रहे हैं एंटी डस्ट कैंपेन के तहत।
That time will never come back. That was indeed a heaven view. There was less pollution, but now festive season is coming closer day by day, and again there will be same pollution, same problem.
पॉल्यूशन से बहुत ज़्यादा एलर्जी है। जब कोरोना नहीं था मैं तब भी मास्क यूज़ करती थी, आज भी यूज़ कर रही हूँ, तो मेरे लिए तो कोई भी चेंजेस नहीं हुए वहाँ।
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
From New York and London, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. 1 hour away from the opening bell in New York City, your equity market looks a little something like this on the S&P 500. We are unchanged. In the bond market, not much action either, nor on euro-dollar at 117.57, just slightly firmer there as we await the PPI data coming in from America. There it is, and here is Michael McKee.
Well, John, PPI doesn't carry the excitement it used to, but we are seeing a little more inflation, at least compared with PPI in the last month. The PPI for final demand up 0.4 on a month-over-month basis. That's double what the anticipation was. It was up 0.3 the prior month. Ex-food and energy, 0.4 gain as well. That was also double what was expected. On a year-over-year basis, we finally get a positive reading. In August, the PPI was negative 0.2, but in September, it is positive 0.4. So a string of fours across the board there. And the core rate for PPI is at 1.2%. That's a little better than the 1% expected and certainly up from 0.6%. 2/3 of the rise in prices, the BLS says, is attributable to a 0.4 increase in the index for final demand services. Services, of course, is what changed this index. They added services into the factory gate considerations, and it's become a little bit even less decoupled from consumer prices than it had been. But we do get a read now on what the services industries are doing, and they were up 0.4 on the month, the same as the overall headline. Final demand for goods also moving up 0.4. So 4 seems to be the Sesame Street number of the day, guys. And the question is, does it really show inflation, or is it just kind of a reversion to the mean?
That's where I want to go, Michael McKee. Everybody used to stop in a PPI, and then it became out of vogue, and it's sort of coming back into vogue right now. How many months in a row, Mike, do you need a trajectory to indicate an inflation trend off of the disinflation that we saw in final demand? How many more months of data do you need to say inflation?
Well, you have to consider that this is inflation. It's just very low inflation. To get accelerating inflation, you need 2, 3, 4 months of it at the core rate, because we want to strip out food and energy, particularly in this case, even more so than at the consumer price level. And then you have to kind of look at it in tandem with consumer prices, because companies have gotten very good at squishing prices between the factory gate and the retail shelf along the middle of that. And so until you want... what you're looking for, what you want to figure out is what the inflation rate is that affects consumer and business decision making, and that would take a lot more than we're getting right now in the PPI. On claims tomorrow at 8:30, no doubt Michael McKee will join us with that hugely anticipated statistic. Right now, this is a joy. Michael Ferroli came out of Booth School Chicago and New York University as a Fed economist and joined a small bank in New York called J.P. Morgan. He wrote for Mellman, he wrote for Kasman and the others, and within their weekly prospects defined in this nation this odd phrase, potential GDP. John and Lisa have a whole bunch of questions for Dr. Ferroli on where we are right now. Michael, I want to go back to your initial acclaim on potential GDP. Do you adjust that statistic because of the pandemic?
So I think that's an open question right now. Normally, a really bad recession would lead one to lower their estimate of trend GDP growth because there are longer run impacts from short run events like recessions. However, I think it's a little early to say right now because this recession was so short and the recovery so far has been robust enough that it's, I think it's an open question. So for example, normally one would say that the slowdown in capital spending after a recession would lead to slower productivity growth. Right now, it's not clear how much capital spending is actually slowing. We obviously had a bad second quarter, but a good rebound in the third quarter. So I think the jury is still out. It's something we've been considering quite a bit, but right now we're leaving our estimate unchanged at 1.5% for potential GDP growth.
Michael, since an increasing number of people are saying the same thing that you are, that this economic recovery has been more robust than people had expected, and that the recession perhaps a bit shallower, does that mean that there is a greater chance of bigger inflationary pressures given the amount of money that the federal government has thrown at this?
At the margin, yes. Better growth should lead to better, firmer inflation outcomes. It's still the case, however, that unemployment looks like it will be elevated for several quarters to come. So while we may revise our views towards somewhat higher inflation, it's still going to be inflation that we think will remain below the Fed's 2% objective for PCE inflation at least. So directionally, I would agree with what you're saying, but I wouldn't want to take it too far and say that we're looking at a big inflationary year to come.
Michael, we talked about this before. I just wonder how polarized the conversation is with clients at the moment on this issue, on inflation.
Well, inflation's gotten interesting. So we obviously had a few weak months around during the worst of the pandemic. We've had a few strong months since. A lot of that strength has been reversing some of the categories that were weak during the pandemic, but it has kept the discussion alive. I think it's, in my opinion, I think we are in a disinflationary environment. And as you say, the discussion, I'm sure it's polarizing as much as it was perhaps in 2009 when we first were experimenting with expanding the Fed balance sheet. But people definitely are interested in it, particularly given the central importance now it has in the prospects for a future Fed rate hike.
We caught up with Catherine Mann of Citi yesterday, and she brought up a series of issues. I'd love your thoughts on them. She was talking about the gap between consumers' perception of inflation, statistical measures of inflation, and financial market pricing of inflation. Michael, how do those three different things, what's that spread look like at the moment?
Right. So I think financial market expectations are closer to what you're seeing in the actual statistical measures of inflation. I would say consumer perceptions of inflation are higher. I think one of the reasons for that is that consumers tend to put more weight on prices that are more salient. So, for example, food prices tend to seem to carry more weight in consumers' perceptions than they do in the actual baskets of goods and services. And food prices have been a little firm recently. So I think that may be one factor that is leading to that disconnect between consumer perceptions and either financial market expectations, which are, remain relatively depressed, or the actual measures like core PCE, which is also subdued right now.
Michael, how does real estate play into our guesstimate of new inflation? How do rents play in, owners adjusted rent, et cetera? How does ownership of homes play in to our guesstimate or reality of inflation in 12 or 36 months?
Yeah, this is actually a pretty interesting issue because both tenants' rent and owners' imputed rent, which is the rent people who own their homes would be paying, hypothetically, if they had to rent those homes. Both of those have decelerated very sharply in the past 3 months. Some of that may be due to a phenomena that is similar to what we saw in the early 2000s, which is when there's a very hot housing market and everyone's rushing to buy a house, what you see is weakness in the rental market. So it may be a bit of a statistical mirage in a sense, but nonetheless, it will feature pretty prominently because those measures are over 20% of the core PCE basket that the Fed looks at so carefully. So it may be sort of an odd byproduct of a hot housing market is a depressed set of rental measures for inflation.
Michael, pushing forward the next 6 to 12 months, how much does your unemployment forecast vary depending on whether there's a fiscal support plan passed in Washington or not?
Yeah, it could vary quite a bit because the growth outlook could vary quite a bit. If we got something like, some of the numbers have been coalescing around $2 trillion recently. That's 10% of GDP. Even if you haircut that for, people saving some of that stimulus, that would still have a pretty significant effect on GDP growth. And, as GDP growth goes, so goes with some adjustment the unemployment rate. So clearly this is, the markets are not, I think, misled to be focusing so intently on where fiscal stimulus negotiations are going.
Michael Feroli, I don't get much gloom out of the House of Casman, but you had that chart on the trade deficit and weekly prospects this week. Tell me about the twin deficits. Do you link together our trade deficit and our new and enlarged fiscal deficit into something that you need to think about, study about, write about, and we need to understand?
Yeah, so, one of the interesting things is normally in recessions, the U.S. trade deficit tends to contract because U.S. demand for imports tend to contract more than foreign demand for exports. That hasn't been the case in this most recent recession, in part because it was unusually global in nature. So usually the U.S. kind of leads the global recession. This time everyone partook of the recession in a way equally. And so that was one factor, I think, that contributed to this widening the trade deficit. The other thing is that given the nature of this recession, the U.S. Actually runs a surplus in trade and services. However, trade and services has contracted quite a bit given the inability to maintain social distance in many of those services. So we think it's that widening the trade deficit may partly be due to fiscal deficit concerns, fiscal deficit issues, but I think it's also partly due to the global nature of this recent slowdown.
Michael, great to catch up, as always. Send our best to the team, won't you? Michael Feroli there, JP Morgan Securities Chief US economist. Lisa went through the Fed speak about an hour and 40 minutes ago when we started this program, and how refreshing it is not to care too much about what anyone at the Fed's got to say at the moment, Tom. It's an absolute snooze fest, and maybe that was the objective.
Yeah, I think that's the objective as well, and they're waiting for fiscal stimulus. I mean, I saw an article, 2 days ago, that has just presumed fiscal stimulus the end of February. John, we've got to get there, and so does the Fed have to get there. Let me look here. Folks, you can do this quickly on your Bloomberg terminal in your car, FOMC Go, and then, John, I roll over to 2021. Again, you can do this in your car, particularly if you can see the screen, and it's March 17th.
Don't do this in your car.
While
March
driving.
17th, John, next year. That meeting, March
November
7th.
5th.
Are we going to have fiscal stimulus?
5th is the next meeting.
No, but
November 5th is the next
March
meeting.
17th.
That's interesting.
John, you're missing my point. You're focusing on Ronaldo.
All right. Okay.
He's doing well. Ronaldo's doing well.
That's good to hear. Thank
John,
you.
March 17th next year is when we're almost certain to have fiscal stimulus. Says who?
Says you, apparently. March 17th. I look forward to March 17th. Go on, Lisa. Get it back on the rails.
I'm enjoying this. I want to let this keep going. Keep going, guys.
Ireland
Where are you
is
going
to the
with
west, John. Ireland's to the west. Irish holiday.
I will say.
March 17th.
Okay, I'll get this back on the rails, John. I am looking forward to some of this Fed speak, in particular on regulatory issues and asset prices. The question of how much will they let asset prices go up. See? There's
Judge, she could bring a bar to silence in about 4
I can bore everybody.
Operation Get Me to the 9 o'clock, alongside Tom Keene and Lisa Abramowitz.
There's a Fed headline just out. We'll have it for you in a bit.
Awesome. This is Bloomberg.
With the First Word News, I'm Kaylee Lyons. President Trump is battling Democrats and Republicans over a proposed stimulus package. He's telling Senate Republicans to, quote, go big or go home when it comes to a proposal. But Majority Leader Mitch McConnell is only promising a vote on paycheck replacement plan for small businesses. Meanwhile, House Speaker Nancy Pelosi says the White House plan comes up short. She's demanding significant changes. Supreme Court nominee Amy Coney Barrett avoided any major slips in a day of questioning on Capitol Hill. Senate Democrats asked her about abortion rights, healthcare law, guns, and election disputes. Still, they made little progress, derailing Barrett's likely Senate confirmation. The UK is signaling that it will not walk away from trade talks with the European Union immediately. Prime Minister Boris Johnson has set tomorrow as the deadline for an agreement. Still, negotiators are expected to keep talking past then. Johnson and the European Commission President Ursula von der Leyen discussed the impasse today on a video call. And Eli Lilly has put its clinical trial of a virus antibody treatment on hold because of a potential safety concern. Lilly is not saying, however, exactly what that concern is. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lyons. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
There's a lot of nightmarish scenarios booked into things, and if it turns out that the reality is a little better than your nightmare, then I think there's a lot of revision that has to go on, and that revision will be a very positive force for the markets and for the economy.
Jim Paulson there, Luthold Group Chief Investment Strategist, as we count you down to the opening bell in New York. Futures pretty much flat all morning. Alongside Tom Keenan and Lisa Abramovitz, I'm Jonathan Ferro. Looking ahead to the market open, Jim Keenan of BlackRock will be joining us in around about an hour's time. David Kelly of JP Morgan also with us. Ashok Bhatia of Neuberger Berman. Dan Ives of Wedbush.
That's a brilliant set
We'll cover
of guests.
Apple. I'm still going. We'll cover Apple.
These are guys
We'll
that
do
don't want to
fiscal
get up
talks.
early. I get it.
Bankruptcy.
Okay, he's just going to let that go. That's what John's going to do with that one.
Just flicking that one off. Carry on.
Very good. John Farrell, thank you so much. On Bloomberg Radio and Bloomberg Television as well. We're thrilled you're with us early or mid-morning as you can be. Red and green on the screen right now. Right now, Barry Ritholtz with a really, really, really important conversation. Of course, we look at Bloomberg Wealth and also Bloomberg Opinion and his skill sets about actually getting through the financial and investment storms. Barry, I want to talk about product development and the new. You and I have lived this right now. Maybe it's ESG, maybe it's, what are they called? Special purpose acquisition companies, whatever it is. Barry, you and I know this all happens at an 11 a.m. meeting in a skyscraper in New York where 6 people sit in a room and go, what can we do to package a new product to excite people? I mean, that's how the game's played, right?
That's right. And the history of modern Wall Street and modern finance has been a sequence of product developments going all the way back to mutual funds, structured products, decimalization from fractions to decimalization to trading, to ETFs, ESG, SPACs, CDOs, CLOs. All these new products come out because it's a new and clever way to try and generate return without ratcheting up your risk. And most of them, they all seem to fail.
Okay, but Barry, what's so important here, and I'm gonna defend Arthur Levitt and all on decimalization. I mean, I still love to quote Anaconda Copper by 3/8. And again, fractional shares, I think there's a huge value there. But on the manufactured products, how can our listeners and viewers, how can they defend themselves against the marketingness of it and yet get benefit from investing in tangible investment assets?
Well, I'm gonna take a line from the venture capitalists of the world who describe how can you identify a first mover and a pioneer? Well, they're the ones who have the arrows in their back, and there's no reason to rush out and try the latest and greatest anything, whether it's ETFs or ESG or SPACs or what have you. ETFs have been around, 30 years now? You didn't have to be an investor in 1990. You could have given it a little while, let it shake out, and eventually we come to realize, hey, ETFs are an enormous improvement on mutual funds, if for no other reason than their tax efficiency is so superior to mutual funds. And when we look at SPACs, they've been around for just about 20 years, so it's a product that has proven itself. The problem is that people seem to forget a handful of these products have done well, and most of them, at least according to the most recent research, most of them are money losers.
Okay,
And so,
Barry, let's dig into this, because the SPAC rage has been a rage, and we've had a record amount of money raised this year for these vehicles, which basically are blank check companies giving a management team of the likes this year of Bill Ackman, Billy Beane of the A's and of Moneyball, Gary Cohn, and now Masayoshi Son of SoftBank getting in on this.
You've been on this all week.
Well, I mean, I just find this fascinating. You know, do you see this as peak SPAC, or do you think that this just indicates that there's a lot of enthusiasm that has legs to keep running?
So,
yes, peak SPAC.
I wouldn't say peak SPAC. I would say you have just read a list of investors, some of whom have a spectacular track record and some of whom have a spectacularly terrible track record. I guess if you like WeWork, then by all means, go buy the SoftBank SPAC. That sounds like fun. I have to point out, you mentioned Bill Ackman, whose track record is outstanding, but you have to mention the man who is the reason why SPACs have gotten as popular as they have, and that's Sir Martin Franklin, whose track record in rolling out SPACs in the mid-2000s was nothing short of spectacular, 1,000% and up returns on multiple SPACs. And because of his specific track record, because he's done so well, lots of other SPACs have come to the fore. And, you know, Usain Bolt is really fast, but that doesn't mean anyone can grab a pair of Nikes and some gym shorts and set world records. And that's the environment we're in now.
Right.
Everybody wants to remember the commercial, be like Mike. Everybody wants to be like Michael Jordan. Everybody wants to be like Martin Franklin. Very, very few can.
I do want to just say, and Tom, you know, honestly, I think people like SPACs because of all the acronyms. You could do spectacular. You could do all sorts of things that are very funny and wonderful, Tom.
Barry, we've run out of time. We got to do this again. Huge value here. This
whenever you like.
Whole idea of new product as well. Mr. Ritholtz writing for Bloomberg Wealth, Bloomberg Opinion as well. Ritholtz Wealth Management. They manage money and try to buy more Apple every single day. Lisa, we hardly covered Apple in this hour. It's a scandal.
It's a scandal. I'm sure that it's going to be a scandal on my bank account, frankly, after my children watched the 1 p.m. Conference of the new iPhones. And they really seem to be bifurcating it with the high-priced ones and then one
Yeah, but I
SE.
have trouble with this. Lisa, I'm so glad you bring this up. Look, this is not about buying a $600 phone or $1,000, whatever they cost. They have got us into a utility mentality of a monthly plan, whether it's $50 or $60 or $75. And the media, Lisa, doesn't talk about this enough.
I totally agree.
It's in a total cash flow. You know, granted, if you buy 1, 2, 3, 4, 8 phones, it adds up. But these are not $1,000 purchases. 85%, I believe, are monthly purchases.
Yeah, I do want to say this is sort of a very important turning point, though, for Apple, because for 3 years, they've seen the replacement cycle decline, people keeping their phones for longer. I am guilty of that. I believe you are, too, because you really love the battery. But going forward, can they get people, can they entice people to switch out their phones, whether it's monthly or whether it's a $1,000 payment all up front? And that's the big question. Yeah, go ahead, Tom.
I've heard it like 14 times, Lisa. Apple's done. They're going to die. Larry Havard and I sat on Fifth Avenue once at the store listening to all this gloom around us, and the great Lawrence Haverty said, "What?" And it did.
Yeah. Keep looking for an entry point, Tom.
I'm looking for an entry point. NASDAQ up 0.2%. I need to see it go down 0.1% before I load the boat. Stay with us on Bloomberg Radio, on Bloomberg Television. Good morning.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From London and New York, for our audience worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes ahead of the opening bell. Equity futures up 7. We advance 0.2%, and we begin with the big issue. A $2 trillion game of chicken playing out on Capitol Hill.
Markets are quite focused on stimulus.
Another very big round of fiscal stimulus in the U.S.
I think it needed pretty badly.
There's no doubt that the real economy needs extra stimulus.
They're right to expect it'll come.
Hopes have ebbed and flowed quite significantly about the chances of a deal.
That's what we need, is some stimulus to carry us through.
Roller coaster sums it up very nicely.
The market's convinced, I believe, that we are going to have some kind of stimulus.
It looks like it's on life support.
It's just a matter of when it's going to occur and then what the magnitude's going to be.
Uncertainty around timing and size of the fiscal stimulus.
If we don't get stimulus,
fiscal is not a given.
It's going to be a very difficult recovery.
Well, prospects for another stimulus package quickly dimming with just 20 days until the election. Speaker Pelosi refusing to back down.
I want this very much now because people need help now. But it's no use giving them a false thing just because the president wants to put a check with his name on it in the mail, that we should not be doing all we can to help people pay the rent, put food on the table, to enhance benefits, that they don't lose their jobs if they're state and local.
And with partisan tensions rising, fractions emerging between the administration and Senate leadership. President Trump undercutting Majority Leader Mitch McConnell after announcing plans for a vote on a smaller bill. The president tweeting, quote, stimulus, go big or go home. And where's Treasury Secretary Stephen Mnuchin going to be, you might ask? He's reportedly heading to the Middle East next week. Let's bring in Kevin Cirilli, shall we? Bloomberg Chief Washington Correspondent. Kevin, does anyone in Congress actually want to make a deal down in D.C. before this election?
President Trump does. And based upon conversations I'm having, they view this as, again, an opportunity to get something done before the election and to get some type of momentum that they so desperately need at this point in the campaign for president. Meanwhile, the dynamics that are increasingly becoming more volatile, not just for Republicans in the Senate, but also for Speaker of the House Nancy Pelosi. She has made the strategic move that she can stare down President Trump, stare down Leader McConnell, and not blink as it relates to a stimulus deal ahead of November 3rd. However, she also now is dealing increasingly with rank-and-file members who are very frustrated that they are not able to get to some type of deal. I've spoken with them all throughout this week, and what I can tell you is that they don't want to have to go home, Jonathan, empty-handed. Let's pull up a quote from Speaker of the House Nancy Pelosi and what she said yesterday. You played that Wolf Blitzer interview. She went on to say, quote, "Tragically, the Trump proposal falls significantly short of what this pandemic and deep recession demands. Significant changes must be made to remedy the Trump proposals, which she's calling deficiencies. In the sticking points in what we're talking about, the inclusion of a child tax credit, the amount of aid for child care, aid for small businesses, and, of course, the state and local governments." But I will note here, when you have to compare this you can't look at this in a vacuum. $1.8 trillion coming from the White House that they're put forth now, significantly more than the $560 billion that Leader McConnell had originally called for, and still significantly more than the amount of money that they passed in a stimulus in 2008. This is a massive amount of cash, and even if Speaker Pelosi is unable to get to a deal ahead of the November 3rd elections, her bargaining power, Jonathan, one could make the case diminishes in the lame duck.
Oh, well, Kevin, it's political posturing, isn't it? And we've seen this play out before. The issue that Speaker Pelosi has now, I'm not sure who that quote is for, whether it's actually for a general audience or her own party, who are pushing back and saying, call McConnell's bluff, call the administration's bluff, agree to a deal. We know it won't pass the Senate.
Yes, and especially now she has to navigate with the flank of her party as well as the rank-and-file members who are also looking. I mean, $1.8 trillion is nearly the size of Apple. And so I think from a broader standpoint, it's all about timing, whether it happens before the end of the year. But regardless of the political landscape, mid-November or December, the bargaining and negotiating power for a Speaker of the House, there's questions about that. Yeah. And that's historical.
Hey, Kevin, great to catch
historical.
Up.
Thank you. Yeah.
I get it. A busy morning ahead for you. Kevin Cirilli down in Washington, D.C. Here's your price action, 25 minutes out from the opening bell. Your equity market shaping up as follows. It just feels like we're turning the sound up and down, the volume on the same song for the last 3 months. But the track hasn't changed. I said that last week, and it feels the same way this morning. In the bond market, yields in a single basis point to 0.71%. Euro-dollar not doing a whole lot, 117.60 on that currency pair. Neuberger Berman's Ashok Bhatia emphasising the importance of fiscal policy, writing the following. With central bank policy on autopilot and minimising downside risk for markets, fiscal policy will be a key driver for upside in the markets, and we may end up seeing unprecedented spending next year. I'm pleased to say that Ashok joins us now. So, Ashok, it used to be that we'd worry about a clean sweep, a blue wave, a red wave, whatever it might be, and divided government is what markets would welcome. Is divided government what markets fear now?
Yeah, I think, good morning, Jonathan. I think that's exactly right. I think for short term, and by that I mean the next few months and into early next year, divided government is probably going to be, at least short term, a little bit of a disappointment for markets at these levels. I think Kevin was just pointing out these spending numbers. The U.S. is running about a little over a $3 trillion deficit. That's triple from what we were pre-COVID levels. And regardless of whether we pass, this additional spending in some now or in a lame duck, we're on a trajectory for significantly higher fiscal spending. And I do think the markets are pricing, a reasonably high probability of a blue wave that takes another big leap in fiscal spending next year and creates some of this upside risk to the markets are pricing in right now.
Ashok, one question we've explored over the last couple of weeks on this programme is just how quickly the narrative has flipped, almost out of nowhere after that first debate between President Trump and former Vice President Joe Biden. And a question I've asked repeatedly, Ashok, I'll ask it of you. How vulnerable is this fresh market narrative that everything's going to be great down in Washington for the next several months out into 21, and we'll get all the good stuff and none of the bad stuff?
Yeah, I think these narratives, as Jonathan just said, they are shifting rapidly. I would add one point. I think, part of why this narrative has shifted has not just been the apparent advantage Joe Biden has in the polls and some of the Senate polling, but it's also been some of these comments that, if he were to win and we get a blue wave, it would be a focus on spending near term with deferred tax hikes and things like that, some of the more growth negative issues. So I think that's a balance the market, at least short term likes. So one risk would be if some of those, tax hikes and some of that deferred negative growth types of policies were to come back to be linked up immediately with higher spending. So even in a blue wave, if that policy mix shifts, could see that being a little bit of downside pressure for the markets.
So, Ashok, just on the 10-year specifically in the Treasury market, why do we have such a range-bound 10-year yield still, slap bang in the middle of the range of the last 5 months?
I think the short answer is the Fed has a lot of credibility about and a lot of tools. And, the market is reluctant to take interest rates or government bond yields to significantly higher levels, knowing that the Fed could do things like expanded purchase programs, yield curve caps, all these, other sorts of tools that effectively pin interest rates. And in addition to that, we are seeing falls in sovereign bond yields. Italy, Spain, the pressure from negative rates in Europe continues, and that just creates some spillover demand into our government bond market as well.
Ashok, before I let you go, you mentioned Europe. That's been a trade a lot of people have talked about on this program, on this network. Long Europe in the bond market, peripheral debt really rallying in the last couple of weeks. Short treasuries. Are you behind that call too?
Yeah, we do think, short, intermediate term, there's a lot of interesting things that could happen in Europe. And by extension, the dollar. One of the things that just sticks out this year has been the continued weakness on a year-over-year basis in some, particularly in the emerging market currencies. We've obviously seen things like the euro and the developed currencies starting to trade a little bit better. But one of the others, we talked about narrative shifts that could end up occurring is, depending on the result, do you start to see more traction behind a weak dollar move more broadly, which would continue to help not just European fixed income assets, but really a range of EM as well.
Ashok, really good points. Looking forward to continuing the conversation over the next 12 months or so and beyond. Ashok Bali there on this market. Equity futures are firmer by 6 on the S&P. Ashok mentioned that weaker dollar. That's what's playing out in G10 right now. Top of the pile, sterling. We'll talk about that a little bit later at the market desk with your movers. Here's Abigail.
Well, John, the U.S. futures are up just slightly, so let's take a look at a few movers that are on the move just a little bit more. Starting out with Microsoft, this stock now on pace for its 6th update in a row, the first time that will happen since May. UBS has initiated with a buy rating. Palantir popping not on a lot of new news, but really as a barometer of some of the risk on tone. United Health had been higher earlier, now down slightly. They put up a strong quarter, and they also raised the forecast as costs remain low. We'll be looking into and reporting on what's now causing that stock to drop. And then finally, Grubhub up 5.3% as Dutch Eat Takeaway has given a positive update. The Dutch company is saying that they are on track to complete their $7.3 billion takeover of Grubhub. So unlikely to be an LVMH Tiffany situation. Grubhub shareholders liking that news this morning, John.
Abigail, thank you. Great work. We'll catch up with Abigail a little bit later in the hour. Coming up on this programme, earnings in focus, the financials remaining in the spotlight. We're breaking down the latest results with Piper Sandler's Jeff Hart and JP Morgan's David Kelly. That conversation next on Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Banks are products of their economy. So if the U.S. economy, as you know, is going to have some incredible growth in the third quarter, but that's more of a mathematical exercise to the second quarter. But if we start to see, 2 to 4% real GDP growth in the fourth quarter and first quarter of next year, then we're going to start to see the all clear signal for the banks to be able to grow. And that is going to be the challenge for 21, is growing those top line revenues.
RBC's Gerard Cassidy discussing the headwinds and uncertainties facing the banks this earnings season. All of the majors lenders reporting thus far topping trading revenue estimates, except for Bank of America. Bloomberg's Shonali Bassett joins us now for more. Shonali, on top of the figures over the last 24 hours, what's the theme?
The theme is that the big consumer banks are taking a beating as the economy is so uncertain that they're not sure that they can reduce their reserves. There's a real worry here that these credit losses will go well into next year. But the trading businesses, as we've seen, are doing okay. We have JP Morgan posting major gains. We have Goldman posting major gains. And if you take a look at this chart here, you see they're rising very significantly. And you wonder about how much market share they are really taking. Goldman coming in just shy of JP Morgan in terms of percentage increase as their equities fell a little lighter than expected. But all in all, Goldman is the one that's the real standout here, John, because they're able to post returns above 17% when it comes to return on equity. It's a real turnaround story, and it's a real difference from what we've seen in the last crisis.
Shonali, great work as always, and you see it in the stock price. Goldman up right now, 2% ahead of the opening bell. Piper Sandler's banking analyst Jeff Hart joins us now on the phone. He's bullish on most of the big banks, with overweight ratings on both Bank of America and Goldman Sachs. Jeff, great to get you with us this morning. I know it's super busy for you, so let's run through things just quickly. Do you like what you see so far?
Yeah, so far I think it's been pretty good earnings, at least from the big banks. I think the concern and what's kind of weighed on banks in general is, people are now looking past credit and kind of figuring we'll get through credit and what's the revenue environment can look like after that. And sluggish loan growth and low interest rates kind of create some headwinds for banks in general. But when I look at the large cap banks, all the ones I cover, like Goldman Sachs, JP Morgan, I mean, they, I think, are well positioned to thrive in an environment where revenues are tough because they have scale, and scale will matter more than ever, and they have exposure to capital markets. So that's really been the bright spot as far as revenues have gone kind of since COVID. Both investment banking and trading have been strong, quite resilient, and the backlogs look good. So I think we'll see that kind of strength continue going forward.
Looking ahead to Morgan Stanley tomorrow, Jeff, what are you looking for?
I think we'll probably hear more of kind of what we heard, what we have been hearing both from JP Morgan, Citi, and specifically Goldman today. Very good trading revenues, probably better than expected. Good investment banking revenues with building pipelines. And for Morgan Stanley, I think you'll kind of see that one of the interesting things for them is, they're going to start integrating E-Trade, and then you've got Eaton Vance. You've kind of got some execution kind of risk kind of creeping in there. So that'll maybe make them a little more interesting over the next couple of quarters. But I think we're going to get very solid results from Morgan Stanley's ball tomorrow.
Jeff, just a final question from me on the kind of business model you think is set to succeed through the next 12 months and beyond? Is it the streamlined focus Morgan Stanley or the more universal model, the big beast, the likes of JP Morgan, etc.?
I'm inclined to think in the near term you want to be more kind of overweight the investment banks, be it a Goldman Sachs or a Morgan Stanley, just from a business mix perspective, because they're light on net interest income and heavy on capital markets. But you get beyond that into next year, I think that the big banks, the G-SIBs are at least in my mind the place to be, because they have scale, and scale matters more now than ever today.
Jeff, great to catch up. As always, I'll let you go. Jeff Hart there, joining us on the bank earnings. Sticking with earnings, JP Morgan's David Kelly blaming the coronavirus for interrupting the V-shaped earnings recovery, writing the following. We expect earnings to be down about 15% year over year this quarter, with the pace of improvement slowing in Q4 due to the pandemic and lack of further fiscal stimulus. 2021 earnings depends on how quickly and completely we end the pandemic. David joins us now for more. David, that makes it pretty difficult to have any kind of projection or forecast into next year, doesn't it?
Well, yes, it does. I mean, there's still an awful lot of uncertainty out there because we don't know how rapidly a vaccine is going to be developed and distributed, and we don't know if the whole public is going to get into this a united effort to squash the pandemic. It's not just about taking the vaccine; it's about everybody sort of working the same direction. So there's some question mark there, but the equity investing business is a long-term business, and we will get past this pandemic, and I think that later on next year, provided there is a vaccine, I think we will see some stronger growth. But in the short term, it's going to be rough after a very good bounce in the third quarter.
Well, David, you've characterized this as the V interrupted. Can you walk us through what you're set to see, what you think we're set to see in the coming quarters?
Yeah, well, I think, first of all, on GDP perspective, we were down 31.4% in Q2. We're going to be up about 35% in Q3, and then there's going to be a screeching of brakes because we're only going to be up about 3%, if that, in Q4. I think something similar in the first quarter of next year, and then we can begin to reaccelerate. But we're still going to be, half the economy is going to have come back. The other half, the entertainment, leisure, retail, and so forth, will not have come back and can't come back until we subdue the pandemic, and the pandemic's actually getting worse. So that's the V interrupted. It looks like a V right now, but it's going to slow down. That's also the case in earnings. Down 15%, we think, for the third quarter, maybe down 9% for the fourth quarter, but it's still going to be down year over year, in the fourth quarter. And I think we won't hit a new all-time high in earnings until 2022. We'll get there, but it's just not at the pace that we're seeing in the third quarter.
We might see a record high in the market again pretty soon, David. We're not far off it. You mentioned the K-shaped recovery. Not the K itself, but you alluded to it. And I just wonder, the two legs of the K, the haves and the have-nots, those that are doing really well and those that are being left behind. Can we talk about the price of that story and which leg of that K is most vulnerable, just looking at how it's priced?
Well, I think that within markets, it's sort of a difference. Yeah, I don't think actually the markets are a very good representation of the K that's going on in the economy. And I think the financials are a perfect example of that, where they're not priced that expensive. They're sort of boring and everybody's kind of worried about them. I'm actually not that worried. I think we will get more fiscal stimulus after the election, both in the lame duck session of Congress and in the new Congress. And that should help reduce credit losses until you get that surge in growth later on next year. And then when you get that, I think you get a steeper yield curve, which will also help financials. So financials are being treated as if they are victims of this pandemic when they're really operating pretty well. But on the upper side of the K, there's certainly a lot of interest in mega cap growth stocks, a lot of money going into that area. And maybe that is a little bit overpriced because, in the end, valuations are really important here. And we're seeing this widening dispersion of valuations within a market, which, we are going to get past this pandemic. This is a sort of a 2-year event. And when we get past it, we need to think much more carefully about valuations.
But right now, what do you want to own, David? The financials or big tech?
I'd rather own financials, to be honest, because I have to have more than a 12-month view. I'm not going to try and time this thing. I think that's crazy. But also international. I mean, international equities in general are beaten down because people have had a very negative view on stock markets overseas, unlike here in the United States. And those do look demonstrably cheap relative to the U.S. So I think U.S. value stocks, financials, international equities, that's where I'd want to be a little overweight going into 2021.
It seems to all be part of the same trade, David. I hear it a lot. Anyone that tells me they're overweight or like the financials here in the United States, I almost know what's coming next. They like the international side of the story as well. How do you balance that out, David?
Well, because what's going on is people have forgotten about valuations. It is such a complicated world this year. I mean, companies are not even releasing guidance because they don't know how to figure out their earnings. If companies can't figure out their earnings, what are the analysts, what are the investors going to do? So what people are doing is they're going into momentum trades. They're buying large mega cap growth stocks, and they're also piling into, high quality bonds. Both of those look rather expensive in this environment. But what I'm saying is that as you get past the election, as you get past the pandemic, as uncertainty actually comes down, and it will come down, then valuations will be more important. And what U.S. value stocks, financials in general, international equities, EM, DM, what they all have in common is they look pretty reasonable in terms of valuations. I think that's what's going to play out well over the next 2 years as we get past this pandemic.
David Kelly at JP Morgan. Great to catch up, sir. My best to you and the team. Coming up on the programme, the analyst action you need to know. That'll be next in our morning calls. And later, Wedbush's Dan Ives joins us to review Apple's newly unveiled iPhones. That conversation still ahead. From London and New York this morning, good morning. With equity futures shaping up as follows on the S&P 500. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Five minutes away from the opening bell, equity futures up about 5 or 6 points on the S&P 500. We advance almost 0.2%. Let's get you some morning calls, shall we? A look at some of the analyst recommendations on Wall Street this morning. We begin first up with UBS, downgrading Splunk by 2 notches, cutting shares to a sell from a buy, a 165 price target. The analyst expecting the company to lower its growth targets at next week's Analyst Day. Your second call from Wells Fargo, downgrading Kroger to equal weight, $34 price target. The analyst seeing headwinds to post-pandemic sales and less favourable risk profile. That stock is off by a little more than 1%. And your third and final call from Jefferies, raising its Apple's price target to 140. The analyst expecting a robust upgrade cycle fueled by increasing carrier promotions. That stock unchanged. One man very bullish on that stock. Wedbush Managing Director Dan Ives. He'll be joining us very shortly, right here on Bloomberg.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Wednesday morning, 20 seconds away from the opening bell in New York City, 20 days away from a general election in the United States of America, a $2 trillion game of chicken playing out on Capitol Hill over fiscal stimulus. The vaccine race hitting a speed bump. We'll talk about that in just a moment. Equity futures up 4 on the S&P, advancing a little more than 0.1% on the NASDAQ. That's the opening bell. Switch up the board in the bond market. Treasury yields coming down a basis point on a 10-year to 0.72%. In the FX market, euro dollar just a little bit firmer on the euro side to 117.60, and in the commodity market, $40 and about 90 cents. We advanced by around about 1.8%. That's the cross-asset picture this Wednesday morning with your movers at the markets desk. Here is Abigail.
John, let's start out with the shares of Qualcomm because the chip maker is popping higher. The street's super positive after Apple, of course, yesterday revealed those new 5G iPhones, saying that Qualcomm is likely to be a primary beneficiary. Bank of America, in fact, has raised their price target to a street high of $165. We also have the shares of Moderna higher. This as the European Medicine Agency has said the company is eligible to submit an application for its vaccine for COVID-19. AutoZone, this is interesting, up 1.9% as Raymond James is now naming the stock a top pick, also boosting the rating to a strong buy on the company's strong guidance given a couple weeks ago. So the analyst pondering this, liking it, also saying valuation is attractive. And then finally, take a look at the shares of Conto Resources soaring up 11% on a Bloomberg exclusive. The company, ConocoPhillips, is said to be in talks to buy Conto Resources for its Permian assets, and Conto has a market cap of about $9 billion. And that right now, John, seems to be helping the energy sector, the second best on the day right now, at least.
Abigail, thank you. Top of the pile, the industrials advancing around about 0.5% at the moment. Energy now top of the pile, advancing 0.5%. A moving target, the S&P 500 unchanged at the moment. Moving now to healthcare, the race for a vaccine stumbling with two pharma giants recently suffering setbacks. Eli Lilly becoming the latest company to put its trials on hold. Weighing in, Bloomberg's Scarlett Fu joins us now for more. Hey, Scarlett.
Good morning, John. Yeah, I'm looking at Eli Lilly stabilizing after a 2-day slide, saying Tuesday afternoon it's pausing enrollment in a clinical trial of its antibody therapy. A week ago, remember, Lilly had asked the FDA for emergency use authorization. J&J also recovering a bit here. Late Monday, a volunteer in J&J's study for its experimental vaccine got sick, and it's now halted the phase 3 trial, which is seen as one of the larger trials. Pauses during drug trials are not unusual, but these are not the normal of times, most normal of times, with companies accelerating what's normally a years-long process powered by the White House's $18 billion Operation Warp Speed program. The worry here is that political pressure may compromise scientific rigor. We know President Trump has promised a treatment before the election. Investors are also desperate for good news before the start of winter and what's expected to be another wave of the virus. Now, J&J's vaccine has some advantages over its competitors in that it does not need to be frozen, making logistics of administering it much easier down the road and may work with just one dose rather than two. AstraZeneca's vaccine also uses the adenovirus treatment. It's been forced to halt its trial twice and is still on hold in the U.S. Other frontrunners include Pfizer, which is working with BioNTech. It's furthest along the clinical trials, and it's using a messenger RNA technology. Moderna also developing an mRNA-based vaccine. Now, by contrast, Lilly is working on an antibody treatment, which is seen as more of a bridge to vaccines. As for what's priced into markets, here's where it gets interesting. Balyasny Asset Management's co-founders said the market markets expect a vaccine that's only 50 to 60% effective. So that leaves room for beaten down stocks to rally if the vaccine ends up being more protective than that. John?
Scarlett, thank you. One of those companies could hold the key to the economic outlook for years to come. Scarlett Fu, thank you very much. Looking at this market, Apple down for a second day, down by around about 0.7% this morning. The newest iPhones fueling expectations for a new cycle of sales growth. CEO Tim Cook saying 5G is the most exciting step yet.
Each generation of cellular network technology on iPhone has enabled breakthrough innovations and entirely new opportunities for our developers and our users. And 5G is the most exciting step yet. For so many people, this all becomes real with 5G coming to iPhone.
Bloomberg's Ed Ludlow joins us now from San Francisco. Ed, I can get the phone. Can I actually get 5G?
Well, Apple addressed that head on, John, saying they tested with hundreds of carriers around the world. And as you know, ahead of this event, we'd reported that third parties, as well as Apple's own testers, had found that basically the speeds with 5G on the new generation were limited. But broadly, the reaction is positive from Wall Street, and there's a real focus on Apple's pricing strategy. With that iPhone 12 mini at $699, it makes the product more accessible because across the four handsets, you've got OLED screens, you've got updated cameras, you've got that faster A14 processor as standard. But if you look to the iPhone 12 mini, there's hundreds of millions of us around the world that have older generations of iPhone, and the consensus is that there was enough across the four handsets to spur that upgrade cycle. Equally, if you look at the iPhone 12 Pro Max, the most expensive handset with the 6.7-inch display, there's some exclusive features there, particularly around the camera, and analysts see that enticing consumers, even with the higher price point, driving average selling price is higher. And as you know, John, this is a saturated cell phone market where we see refresh rates and higher SPs being a bigger driver of revenue growth. There's also a really positive response this morning around the role that carriers are going to play. You saw Verizon CEO Hans Vestberg up on stage with Tim Cook. Verizon is going to offer to new customers that handset for free, the more expensive ones, not the iPhone 12 mini, as long as it's a new customer of a trade-in. AT&T are going to go a step further and offer it to existing customers. The feeling from Wall Street is that that's going to help with the affordability of these slightly more expensive handsets. And as I said, look, it's been suggested by some analysts that, yes, 5G may not be pervasive in some US cities or in your community, but there is an element of future-proofing here, right? This is the most substantive technology upgrade from Apple in some time. The idea here is that consumers will buy the phone and wait, basically, until 5G comes to their city. I think the stock's a little lower this morning, but it's doubled since a March low, John, so I'm not sure if it's a case of selling the news. But broadly speaking, I think analysts on Wall Street like what they see.
Or you just wait for the next phone when 5G actually arrives. Ed Ludlow on the West Coast. Ed, always great to catch up, sir. Great reporting in the last 24 hours. Wedbush's Dan Ives also weighing in on this. Very bullish through this year, calling Apple's debut rollout a once-in-a-decade launch, writing the following: it's the most important product cycle since the iPhone 6 in 2014. That should translate into a super cycle for Cupertino next year. 350 million of 950 million iPhones worldwide are currently in the window of an upgrade opportunity, translating into an unprecedented upgrade cycle. Dan joins us now for more. Dan, let's just start there. What's the window for an upgrade opportunity? How do you define that?
Yeah, I would define that as those are customers that, based on our analysis, have not upgraded in 3.5 years. Now, if I go back to the last two cycles, that was about 25 to 28% of the install base. Now it's 40%. And that's really why the pent-up demand there over the next 12 months with this 5G phone, I view it as going into the Cupertino Hall of Fame as a super cycle.
Some people might say, Dan, it's like buying a Ferrari and only driving it around Manhattan. I understand lots of people are stupid enough to do that. But if you have a 5G phone that can't access 5G, what's the point, Dan?
Yeah, and look, and to that point, I would view it as over the next 3, 6, 9 months, 5G is on its way to getting to prime time, especially in the U.S. You know, obviously Verizon and everything they've done, the millimeter wave. And from an install-based perspective, it's the most transformational technology upgrade that we've seen from Apple since 2014 with the iconic iPhone 6. With that pent-up demand, I think this is enough, potentially, to exceed that peak year 231 million iPhone units. And if that does happen, We're looking a year from now, $175 stock.
Dan, I know that 30 days isn't a big deal, but the launch of this phone is a month later, typically to what we would expect going into the holiday season. What does that mean for where you think these numbers will fall?
Yeah, obviously it moves it out a bit, but I think the key here, the line in the sand, is ahead of holiday season. Going into holiday season and into next year, of course, there's still some supply issues coming out of Asia. But if I look at, based on our checks, we've seen unit in terms of pent-up demand out of suppliers going up about 10 million, call it almost 15% over the last 6 to 8 weeks. That's a positive tea leaf. We'll see, when Apple reports numbers later this month. But it all comes down to China. China is the linchpin of growth for this to be a super cycle.
What happened yesterday with China, Dan, with the streaming issues? What was your read on that?
I mean, my read, that was, a retaliatory issue that we saw during the streaming live webcast. You saw it throughout China. Many of the social media platforms took that down. And I think that's also why the stock acted negative, given this cold tech war between U.S. and China and where Apple stands. I view it as more of a noisemaker, although it does speak to the tensions. It all comes down to 60 to 70 million iPhones are a window of opportunity in China. And I think that
just want to get to re-rating to wrap things up, Dan, if I might. On the multiple, you and I have talked many times the importance of China. We've talked about the importance of the services business, and now it just feels like we're going old school again. The re-rating is about the hardware. Dan, can you speak to that?
Yeah, I think it's a great point, because for now, the hearts and lungs, the key to the upgrade cycle is putting that iron fence around the install base. That's what iPhone 12 is going to do in the super cycle. Then the next leg, the 1-2 punch, is the further monetization of that on the services side. But at least over the next 3, 6, 9 months, we get back to old school in terms of the super cycle. And if this is what I believe it can be, I think it cements really the next 2-3 years of growth for Apple, despite, the haters continuing to hate.
The haters will always hate. Dan Ives, you've been a lover, not a hater, and you've been right through much of 2020. Dan Ives of Wedbush on Apple. Thank you, sir. Apple stock, as Dan Ives speaks, turns positive, up about 0.8% on the session. Bank of America is lower in early trading. Listening to the call, here's Shanali Basak.
Thanks, John. You're seeing Bank of America down. Speaking of haters, right, a lot of their businesses are under pressure. In fact, most of them are down. And even when you look at the businesses that are up on the year, like sales and trading, they have missed expectations. So on the call, Bank of America still is telling analysts that they feel that they are gaining share in some of these trading businesses, particularly in equities, but their consumer banking business, that drop that you see there on that chart, that is worse than all of its other peers that have reported, barring Wells Fargo. So they're pretty steep declines. The longer-term headwinds in the economy are also concerning analysts, and the rush to gain market share as they look to open more branches at this time and pull in deposits. It's a very competitive environment out there, and they're looking to sell that story.
Shanali, thank you. Shanali's busiest week of the quarter. It continues tomorrow. Morgan Stanley tomorrow morning, 7:30 Eastern Time. Coming up on this program, retailers, restaurants, airlines, and now potentially movie chains. BlackRock's Jim Keenan joins us to discuss the growing list of companies blaming the pandemic for their looming bankruptcies. That conversation is next. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Let's call it 15 minutes into the session this Wednesday morning. Equities advancing on the S&P 500 by 1/3%, on the Nasdaq by 0.5. U.S. bankruptcy filings are piling up, with more than 250 companies citing the pandemic as a factor for their demise this year. Bloomberg reporting that the world's biggest movie chain, AMC Entertainment, could become the latest to consider a potential bankruptcy, and it could run out with cash by the end of the year. The CEO, Adam Aron, insisting the focus remains on fundraising, saying, quote, "We're going to throw all of our efforts now into raising additional capital, primarily equity, to lengthen our runway even more. We'd like to succeed in this effort. If we don't, obviously, we'll have to consider other options down the road." On this and more, Bloomberg's Sarah Ponczek. Good morning to you, Sarah.
Good morning, John. That's right. Well, another consequence of this COVID-19 arranged economy that we have been living in has been a wave of bankruptcies. And as BTIG's Julian Emanuel put it last night in an email to clients, he said, with the virus accelerating and questions about vaccine development surfacing, stimulus still a near-term unknown, a rise in bankruptcies could happen as winter approaches. Now, correlation may not be causation. However, if you look here, what you're looking at is that white line is your Bloomberg bankruptcy index. That blue line is your 7-day moving average of new COVID cases in the U.S. What we've seen is that bankruptcy pickups have lagged pickups in COVID-19 case counts. Now, we are seeing a pickup in COVID-19 case counts once again, as you can see towards the right end of this chart on your screen. Now, what that does beg the question of is, if we are seeing a rise in COVID-19 case counts, does that mean further lockdown restrictions could be on the way, questionably? And what does that mean for further bankruptcies? Consider where we currently stand. So 204 companies with over $50 million in liabilities have filed for bankruptcy this year. That's the most since 2009, when that comparable number was 239. As for what sectors have been most affected, consumer discretionary and energy make up more than half of the pie. On top of that, you see industrials, also healthcare, but very much cyclically oriented. Some of the largest bankruptcies this year have included Hertz, Ascena Retail, Chesapeake. You mentioned AMC. We will see what happens there. The CEO is denying those claims of those Bloomberg reports and saying that they will continue to focus on raising capital. Now, what have investors been doing in this time, though? Well, they've been focusing on companies with strong balance sheets. This even as we've seen credit spreads really narrow at the same time. So Goldman Sachs has these baskets that they track. One, companies with very strong balance sheets, one with weaker balance sheets. And if you look at the comparison, what we have seen this year, that white line is that strong balance sheet index versus that weak balance sheet index. Even as we have seen credit spreads narrow, that has just continued to trend higher. I'll give you those numbers. That strong balance sheet basket this year up 28% in 2020. Meanwhile, that weak balance sheet basket is still down more than 10%, John.
Sarah, the story's not over yet. Sarah Ponczek on the bankruptcies and the weakness in some of those weak balance sheets at the moment. BlackRock's Jim Keenan seeing opportunities in distressed debt, writing the following: investors seeking total return are shifting money back towards private markets, anticipating deal flow and distressed opportunities to pick up over the next year. Jim joins us now with more. Jim, always great to touch base with you, sir. I just want to draw the distinction between the liquidity issues that we were facing back in spring and the solvency issues that we continue to face now. Can you talk to that, Jim?
Sure. No, absolutely. I mean, obviously, the spring was an extraordinary environment where you had really kind of a market liquidity shock, and you saw the huge dislocation as the markets and the world faced the uncertainty with regards to the virus, but also policy in the response to that. As you've seen significant fiscal monetary policy, as well as an understanding and progressions around treatments and vaccines and testings, you've seen this V-shape off of the bottom. But that being said, there's still an earnings dislocation, and I think that's what you're seeing now. The dispersion between the impact of the virus and what that means for behavioral change, what that means for policy, has a very different impact on certain industries that are very, we'd call it more contact heavy, lodging, leisure, transportation, things like that. Versus this work from home, stay at home, and some of the trends that you've seen that have been very positive in the technology space. So very different, but I would say V shape off the bottom, but the next couple of years is going to be a grind for some of these sectors to try to get back to more of a normalized level of earnings and economic activity.
Jim, from my perspective, given that I'm not in your seat right now, I could say the easy thing to do would be to say, pick this sector, avoid this sector. Within industries, within the impacted industries, the ones that are suffering, are you finding opportunity still, Jim?
Absolutely. I mean, and I think you just touched on it with regards to the beginning of the year, or for the last 6 months, the strong balance sheets have really recovered really well, right? And as money came back into the market and liquidity came back to the market, there was a lot of opportunities, and you've seen whether it's the equity markets or the spread markets really recapture really the large majority of the dislocation that we saw in spreads in the March-April environment. I think when you look at it now, there are certainly these industries and these names that are impacted by the virus, and that will result in some form of restructuring, whether through a bankruptcy process or an out-of-court process where a company is going to either rationalize or restructure its balance sheet because they need to get that debt level to a more normalized level to today's operating earnings. And I would say what we see, just because of the breadth of the virus, right, and just the impact that it's had across and the severity of 2020, but the duration that it has on kind of some of these industries over the next couple of years being below the 2019 levels, there are some really good businesses that didn't necessarily have the best balance sheets coming into this type of environment. And there are opportunities there. And there are opportunities similar to what we saw post the 2008-2009 environment, where good companies just need to restructure, but will be well positioned as those industries normalize over the next several years.
So, Jim, I know there's some distressed investors, not you, were upset about how quickly spreads closed and the Fed's participation in the market because the opportunities went away pretty quickly. You're saying they still exist. Can you add a little bit more colour into how you find them at the moment?
Yeah, I don't think be upset about the recovery of the market, and I think our policymakers did a very good job about providing liquidity and trying to aid the markets to have a more normalized environment, and I think that's been a success. That being said, some of these industries, just because of the dynamic or the reality of the virus in itself and the impact, it's creating behavioral change. It's creating volatility around policy, and we are seeing second waves in certain states or certain countries across Europe. And there will be volatility over the next couple of years until you see a true vaccine and a more normalization with regards to the mortality rate curve. But there are definitely still opportunities. I'd say the March and April environment was a pure dislocation. There was a wide breadth of opportunities that was only successful because of the policy response. Today, it's harder, but you have to look at good and find good companies. And I do think, when you look over the next couple of years, some of these companies, as they start to normalize through the credit, if you can invest kind of at these trough earnings or trough multiples, not necessarily the lows of March and April when everything was priced as liquidation, but when you look at it today, some of these businesses, and you think about their normalization to their growth trends and their value proposition, there are some good opportunities out there through the credit markets from a distress perspective.
Jim, always great to touch base. My best to you and the team over at BlackRock. Jim Keenan there on this market. This equity market up 0.4%, 22 minutes in on a sector price action. Here's Abigail.
John, we are looking at modestly risk-on sector composition at this point, in line with the S&P 500's modest gain. If we use the IMAP in the Bloomberg terminal, you will see all 11 sectors are higher, so investors want in on stocks. We also have most of them up by about 0.4% or more. Energy up top, up 1.7% on possible takeover talk of Concho Resources. Industrials next on airline strength. And then that stay-at-home trade right behind it with tech and communication services. But overall, the bulls are out today, John.
Abigail, thank you. Coming up, the market-moving events you need to be watching. That'll be next in our trading diary. From London and New York, this is Bloomberg.
when everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
$25 in, equities positive, up 0.4 on the S&P, up 0.5% on the Nasdaq. Here's your trading diary. Happening right now, it's day 3 of Supreme Court nominee Amy Coney Barrett's Senate confirmation hearing. You can watch it live on Bloomberg Live at LiveGo. President Donald Trump speaking from the Rose Garden at 11 Eastern before holding a campaign rally at 7 this evening in Iowa. Fed President Robert Kaplan hosting a virtual town hall at 6 o'clock this evening. Morgan Stanley reporting results on Thursday morning. Plus, we'll get another round of initial jobless claims. And finally, on Friday, we get U.S. retail sales to close out the week. From London and New York, that's it for us. We'll close out the show. This was the Countdown to the Open. Catch me on Twitter at FerroTV. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
That's where they are right here.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of in life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. Jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
There's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I'm currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. election.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor schoolteacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to us, 24 people went for the job. 23 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国的脑袋绝不比你长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. And we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating. that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker, so when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. It's got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to the teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives, so we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom, so as soon as I had one I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours, start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blue is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blue is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿都不靠谱。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力， Blue 能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I did the sound check.
How was it?
It was tight. But you've been a bitch, suck a thick cock.
So Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. You know, and it's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch.
This is the hardest nigga of all time. He said when you come for a chigga like me. That was dope.
It's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell. What could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first on line. I was here at 1. I was the third person on line.
So why'd you get here so early?
Because I want to see Busca. I want to touch him.
What do you guys think of Joji?
Oh my God!
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
just said I should quit.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers' touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs?
Definitely.
Definitely. Right.
Yeah.
And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's
Jade.
Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time.
Yeah, my love.
A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in the house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably.
He's written it out bigger on the board. Thank you.
Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I could throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本やったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってきて。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone is a girl, Superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, India. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where's the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
mean
means
to a layman like
feathering
me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously, though, the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard. but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward. In 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that is, this time, this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, you know, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, you know, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes, yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from Paul's home in New Jersey and me in our Bloomberg Interactive Brokers studio, streaming on YouTube as well. This is Bloomberg Business Week. I'm Carol Masser along with Paul Sweeney. And Paul, it's Wednesday, October 14, 2020, and we have definitely seen this movie before. Stocks down, stimulus hopes fading, virus trends, I think you said on our planning call, not our friend.
Not our friend, yeah.
And then we've got politics unusual. We've seen that before, certainly.
Yeah, absolutely. It's the markets really have been held hostage to a certain extent by the stimulus talks, which have really been on again, off again. They kind of feel a little off again right now.
Yeah, absolutely, and it's playing out in the trade. All right, lots to get to over the next 4 hours. First up, though, let's check that trade with our own Charlie Peller.
And I thank you very much. Here's what's going on. We've got the Dow, the S&P, and NASDAQ bouncing along the bottom on this Wednesday here. Stocks lower across the board. Stocks dropped after Treasury Secretary Steven Mnuchin downplayed the chances of striking a stimulus deal before the election. Most major groups in the S&P lower, being led lower by retailers and banks. For example, Wells Fargo after earnings this morning down 5.1%. Bank of America after earnings down 4.3%. Goldman Sachs reported earnings this morning. Shares up now by 0.8%. So here's where we stand. S&P is down 21. That's a drop now of 0.6%. The Dow is down 138, down 0.5. NASDAQ down 92, a drop there of 0.8%. 10 years up 2/32, 10-year yield 0.72%. Gold up 11.30 right now, higher by 0.6%, 19.02 the ounce. And West Texas Intermediate crude up 2%, 41.01 a barrel. Recapping, stocks lower. S&P down 22, a drop of 0.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You are listening to Bloomberg Business Week, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. All right, let's set the Business Week agenda. Katie Greifeld in the house. She's cross-asset reporter at Bloomberg News in our Interactive Brokers studio. Dave Wilson, stocks editor at Bloomberg News. He's on the remote access from New Jersey. And Dave, we kicked off the broadcast saying, okay, stimulus talks fading once again. So too are the financial markets.
Yeah, it sure does look that way. I mean, we started out with gains, gave them back. Now we've turned lower. You look across the 11 main industry groups in the S&P 500, most of them are down. Interestingly, the commodity producers are the exception, along with industrial companies, commodities. You're talking energy and materials there. Of course, with the energy stocks, it helps that you have this speculation, people talking about it to us at least, that Concho Resources may become a takeover target for ConocoPhillips. So you're talking about a couple of companies active in the shale patch, so to speak, that may be getting together. Concho's shares up more than 13%. That certainly jumps out of today's trading. And then, as you've already mentioned, what's going on with the banks, Bank of America and Wells Fargo, their results not well received. Sort of a similar
We've
story
seen that movie before just yesterday.
Exactly. With JP Morgan Chase and Citigroup.
Right.
Same kind of issues. As much as they're sort of reducing their reserves for future loan losses. I mean, with Bank of America, their trading revenue didn't really measure up to the kind of growth that their peers showed. And with Wells Fargo, it's all about, these charges, expenses really kind of catching up to them and resulting in a 56% drop in quarterly profit.
Yeah, it's interesting. Katie, I want to get your sense here. As we think about this stimulus, it kind of, fades and ebbs and flows a little bit. It looks like it's ebbing here today. Where are we seeing that in the bond market? It looks pretty calm today as I look at the Treasury market.
Well, I like what you said in the intro, that the market is kind of being held hostage by these stimulus talks, and you're definitely seeing that today. I mean, I know you mentioned the bond market, but you're seeing it too in stocks. They fell across the board after Mnuchin's comments that it's going to be difficult to pass anything before the election. And turning to the bond market.
Is it really that difficult? I mean, come on, folks. There's an election. We're just a few weeks out. You would think at this point they would be like, yeah, we got to get this done. Right, Katie?
Yeah, absolutely. I mean, the political calculus doesn't make sense to me, but, who am I? But, I mean, in the bond market.
You're a smart reporter, and you know how it works.
I appreciate that. But, I mean, some pretty smart guys in the bond market, they seem to be buying that. You're seeing this reflation trade that has been really building steam for the past couple of weeks. It's kind of petering out in the past few days. Today, you're seeing long-end treasury yields dropping. They're much more sensitive to inflation than the front end. And as a result, you're seeing the yield curve flatten this week. And that's really because, the calculus is the Federal Reserve has thrown the kitchen sink and more at the markets, and we're still not seeing inflation. So at this point, we need some fiscal help.
We've talked a lot on this show, Paul, about this being the J. Powell and the Fed's lending but not spending tour, because that's what they can do. They can lend, but they can't spend. That's where Congress has to come in.
It does. I mean, and I think by all accounts, we would all agree that the Fed has done an admirable job here, being aggressive and being early. And that most recent round of stimulus was there. But Dave, let's pivot just a little bit to earnings here. I mean, what do you think really expectations are for investors? Do they expect managements to come back and say, all right, we have a little bit more visibility here. We're going to put some guidance back out there on the street. We have some visibility into 21, or expectations still should be low?
Well, I mean, you look at what analysts are anticipating for the S&P 500. You're talking about a 21% drop in profit for the third quarter, according to the projections that we've compiled here at Bloomberg. So, that's still part of the mix. Not as bad as what we had in the second quarter, which is more like 31%. But the idea of, companies being willing to kind of step up and say, here's where we see things going in the fourth quarter and into next year. I mean, yeah, that's going to be something that gets people's attention, if only because there were so many companies that pulled back, really starting in April once the first quarter results were out and the coronavirus pandemic was really raging at that point. Things are certainly still unsettled on that score. I mean, the real question is whether companies have a handle on what the business looks like now, to the point where they're confident about what they can say for this quarter and beyond. And given the anticipation of an earnings recovery for a whole lot of companies, more about that next hour.
Hey, all right. That's done with the cheap teasing ahead, all right? Katie Greifeld, 30 seconds for you. You've written about the QQQ, some interesting trend flows we're seeing.
Absolutely, and I think, you're seeing the NASDAQ 100 underperform today, and I think it really boils down to what's happening in the options market, given that you would expect to see tech outperform when we're getting these ugly virus headlines. But talking to people in the market, there's been a lot of options activity just in this week. You're starting to see day traders come back into the options space. So there's a lot of position shifting and jockeying going on ahead of Friday's monthly expiry, which is expected to be a pretty big event. So watch for fireworks.
All right, fireworks. We're getting ready. Katie Greifeld, thank you so much. She's cross-asset reporter at Bloomberg News. She's here in our Interactive Brokers studio. And Dave Wilson, of course, he's going to be back a little bit later on with his stock and chart of the day. So, Paul, let's talk a little bit about what we've got coming up here in the next few hours. Politics, once again, front and center. It's kind of bizarro world right now between the story in the New York Post about Joe Biden and his son. So we're going to try and put some perspective on that and really make sense. What's the truth here about that story?
Right. This is an old story. It's presumably a debunked story, but perhaps the New York Post and their reporting may have something new. But that's certainly fodder for both campaigns.
And it's among the most read on the Bloomberg, has been all day. Also got some leaders in real estate, fast food, and online retail. Ken Swig's going to be back with us, president at Swig Equities, big real estate development and investment firm. He says, get back to work. That's what we need to do. We've also got Cliff Hudson, former CEO of Sonic Drive-In. He's got a new book out, so we'll talk to him about that space and also being a leader in this environment. He has some thoughts on that. And then we've got James Thompson. He used to work at Amazon Services, former business head of Amazon Services, so we'll talk to him about Prime Day. So we've got a full few hours ahead. Just quickly, the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Today's number, nice and round, Paul, 40%. The pandemic has put conservation programs in jeopardy. The Zoological Society of London was forced to close its zoos, denting the 40% of income it gets from ticket sales. Most of its expenditures go towards scientific research and global conservation, plus caring for its 20,000 animals. I mean, you'd think about, right? Just all along our spectrum of life, things are being impacted because of the shutdown.
Absolutely.
All right. Let's get to World and National News headlines. Over to Nancy Lyons in our D.C. studio. Hey, Nance.
Hey, Carol. Supreme Court nominee Amy Coney Barrett is back before the Senate Judiciary Committee today. Vermont Democrat Pat Leahy asked her whether President Trump can legally pardon himself.
So because it would be opining on an open question when I haven't gone through the judicial process to decide it, it's not one on which I can offer a view.
Republicans are pushing to confirm Barrett before the presidential election. Democrats say Republicans are rushing the process. Well, it looks like President Trump might be losing some of his influence among Senate Republicans. Bloomberg's Amy Morris explains.
President Trump's poll numbers are slipping, making the GOP path to keeping control of the Senate increasingly difficult. While Republicans continue to stay in lockstep with the president over their core interests like tax cuts, conservative judicial appointments, and deregulation, the president's push for a stimulus deal flummoxed Republicans who are worried he might become even more unpredictable as the election draws near. Some are even shifting their campaign pitches, less pro-Trump and more anti-Democrat. In Washington, I'm Amy Morris, Bloomberg Radio.
Well, they will not be on the stage together, but both President Trump and former Vice President Joe Biden will be on the stage Thursday night, which was supposed to be the date of their second debate. President Trump will take part in a town hall with NBC News. Biden fields questions in a town hall on ABC. Both events begin at 8 p.m. Eastern Time. Pilgrim's Pride has reached a plea agreement with the U.S. government over charges of price fixing in the chicken industry. If a federal judge approves the agreement, Pilgrim's Pride would pay a fine of $110.5 million as a penalty. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Appreciate that update. Paul, just going through some of the virus stories on the terminal, and I do feel like you're starting to see politicians, leaders, certainly here in New York, Andrew Cuomo, the governor, starting to get tougher when it comes to institutions, organizations, individuals who are not complying with the rules when we're talking about the virus.
Yeah, because I think what we're finding here, certainly within the Metro New York area where we've had so much experience, Carol, is when you do the masking, when you do the social distancing and the washing of hands and all that, that does drive down it bends the curve. It bends the curve. It works, exactly right. It bends the curve, to borrow a phrase that we were using so often back in March and April. But still, when you don't do it, that's when you get the surges. And that's kind of what we're seeing in the metro New York area here. And I think Andrew Cuomo is saying we just cannot go back there. You must adhere to these rules. Otherwise, perhaps funding could be at risk here. And I think some of these politicians are just saying, listen, we really know how to do this. Let's do it. There's no excuse for not doing it.
This is like the teenager who you constantly say, clean up your room, clean up your room, clean up your room, and they don't do it. And then you're like, okay, I'm taking your phone. Oh, you want me to clean up your room? Right. So this is what Cuomo's doing. He's threatening to, as you said, Paul, withhold funding for schools and local governments that fail to comply with the state's shutdown orders. So basically sending a warning to New York City, Orange County, Rockland County, the town of Ramapo, and the village of Spring Valley, because that's certainly where you've seen some of the hot spots when it comes to the virus. We know that those numbers can quickly get out of hand. And so he's watching them very carefully and just trying to put it down. And we have another story on the Bloomberg that talks about a resurgent coronavirus continuing to sweep across Europe. We saw German Chancellor Angela Merkel push for tougher restrictions. So, the whole world is just watching this.
Yeah, and in France, I just saw a headline across the Bloomberg. Macron was going to, really get tougher in some big major cities in France, much like we've seen in the UK, where Manchester, the city of Manchester in England, was effectively put back on lockdown.
Yeah, exactly. All right, you are listening to Bloomberg Business Week. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are off session lows, but it is a down Wednesday here. Banks helping lead the declines. We've got the Dow, the S&P, and NASDAQ all lower right now. S&P slumping 16, down by about 0.5%. The Dow's down 114, down just about 0.4%. NASDAQ down 70, a drop there of 0.6%. 10-year up 1/32, 10-year yield 0.73%. Gold up 0.6%, down 19.02 the ounce. And West Texas Intermediate crude higher by 1.9%. $40.97 a barrel. Again, gold up 0.6. Crude oil pushing higher by 1.9%. We're keeping an eye on bank stocks after earnings this morning. Wells Fargo lower now by 5%. Bank of America down by 4%. Goldman Sachs up now by 0.6%. And of course, we're just 1 hour away from the afternoon call with Bill Maloney. Recapping, S&P down 16, a drop there of 0.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. All right, you're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney, and we just were going over some of the recent virus headlines, including you see France imposing curfews in major cities, New Jersey seeing hospitalizations spike. You also see other headlines, certainly. We just talked about New York getting kind of tougher when it comes to maybe threatening funding to schools and local governments that don't comply with New York State's shutdown order. So there's a lot going on. Our next guest we last caught up with back in July, Dr. Lisa Danzig. She's Chief Medical Advisor at CETF, which stands for COVID Early Treatment Fund. That was founded by an entrepreneur and philanthropist, Steve Kirsch, this year amid the Tell us about that. Exactly what is fluvoxamine and what is the data and what it means for COVID-19 treatments?
Yeah, this is kind of a great story. Who would have thought of a child psychiatrist, Angela Rierson, who is a really good researcher who pays attention to stress responses in cells and the activity of her drugs like fluvoxamine, which is an SSRI. It's in the category of an antidepressant, and it's used in the United States for treatment of obsessive-compulsive disease. And what she had noticed even last year is there was a paper looking at fluvoxamine because it has these anti-inflammatory properties. It has this mechanism called a sigma-1 receptor agonism. It's something that I hadn't even heard of, the role of sigma-1 receptor agonism in reducing this cytokine storm. And the cytokine storm is something that we all know too well. That's the thing that makes people really sick when they get hospitalized or when they get that late phase of COVID disease. So she had even seen last year some studies on fluvoxamine in a sepsis model. So back in the beginning of the year when COVID happened and we understood that there was an inflammatory component, she went to her chair and she said, "Do you think this could work in COVID?" And she was partnered by a geriatric psychiatrist, Dr. Eric Lenz, who's a real clinical trial veteran, and they set up a trial and they really managed the unmanageable. They were able to do a trial in outpatients. And I think when we talked last time, we talked about all the problems that we faced in doing trials in outpatients. First of all, the majority of disease, people were getting so sick in hospitals, that's where the priority was.
Right.
But also, people are too sick to leave their house. One, they just feel horrible and they don't want to go to the doctor. Second, this is highly infectious. We don't want them to go to the doctor. So they managed to do a trial that kept people at home. They delivered a clinic in a bag, if you will. And they had to screen about 1,000 people, but they enrolled 152. And what they found out is that of the patients, half the patients got fluvoxamine, half the patients got placebo. And they looked at objective criteria for deterioration. 8 out of the 80 subjects, or the 72, 8 out of the 72 placebo subjects deteriorated, which meant they dropped their oxygen sats and they had to go to the hospital. 0 of the people on fluvoxamine had the same endpoint.
So help me in the medical community. Is that considered a really good response?
Well, so it's a statistically significant response.
Okay.
So it met a 0.009 p-value if you want to look at that. This is a small study. This is a directionally interesting study. So we call this a really good reason to believe. And we're very excited in following this up with a larger study. This is a study of a drug that prevented some of the dangerous complications of the disease. We don't know what the mechanism is. We're not really sure why. We don't know if it impacted viral replication. And so what we're interested in the next study is actually pairing this with a drug known to impact viral replication.
So doctor, tell us about the next step and the timing associated with that next step.
Well, they're working on a protocol right now. They're trying to nail down which candidate with antiviral properties they'll deliver. Obviously, these things aren't cheap, and so the first trial they were able to do on a shoestring of about $250,000. This next trial will bear with it a price tag of about $2 million, and they want to use the same design, the same design that worked, keeping people at home, delivering them a study drug. Randomizing them and delivering them study drugs so that they can participate in the trial remotely.
So who would, ideally be the type of patient that would get access to this? Like who are we talking about? Just got about a minute left, and then we'll come back and talk some more.
The patients that test positive. So this is a study for early disease.
Okay.
So if somebody is at home, if somebody has been identified as having been in contact with COVID, they get a test, their test is positive, they'd be eligible. A newly positive test, with or without symptoms, you would be eligible for enrolling in a study.
And is it a shot? Is it a pill? What is it?
These are pills.
These are pills. Okay. Hey, sit tight because we want to continue this conversation, also talk about some of the day's headlines when it comes to the virus. We're talking with Dr. Lisa Danzig, Chief Medical Advisor at CETF, stands for COVID-19 Early Treatment Fund. It's been a group of doctors and scientists and epidemiologists, Paul, that are working to repurpose drugs to treat the virus. It makes so much sense because if you can take something that's already gone through FDA approval, right?
Exactly.
And find a second use for it, basically, that's pretty terrific.
That is, and that it goes to the timing issue. A lot of people are just wondering about when are these vaccines or treatments going to get to market. But boy, if you can use something existing that's already FDA approved, as you said, that's a big heads up.
Kind of already on the shelf, almost. All right, we're going to continue with Dr. Danzig in just a moment. You're listening to Bloomberg Business Week. Carol Masser along with Paul Sweeney on this. What day is it? Is it Tuesday?
Let's call
is
it
Wednesday? It's Wednesday.
Yeah.
I did forget.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. Bloomberg Business Week on this Wednesday. I really did, Paul Sweeney, forget what day it was. That happens. It's like, where am I? Who am I? Anyway, it is Wednesday. We're talking with Dr. Lisa Danzig, and we're going to get back to her about some of those virus headlines, Paul.
You bet. I mean, there's so much going on here. It's virus, it's vaccines, but also treatments.
Yeah, exactly. I feel like we're getting more on treatments as we move along on this. All right, we'll get back to that in just a moment. Let's get back, though, to Charlie Pellet. There is so much going on right now in the world of business.
Indeed, and that's what we do here at Bloomberg. We cover it all. We've got the Dow, the S&P, and NASDAQ all dropping. This after Treasury Secretary Steven Mnuchin downplayed the chances of striking a stimulus deal before the election. We are watching for any developments, so traders also going through those earnings reports from big banks. Wells Fargo this morning now tumbling by 5.2%. Bank of America also up this morning, down 4%. And right now, Goldman Sachs shares, they are higher by 0.6%. S&P slumping 23 points, down 0.7%. The Dow down 161, down 0.6. And NASDAQ down 101, a drop there of 0.9%. 10 years up 1/32, 10-year yield 0.72%. Gold up 0.5, higher by $9 the ounce at $1,900. And West Texas Intermediate crude up 2% right now at $41.01 a barrel. Amazon workers say virus safety vows have been broken in the Prime Day rush. Now, in a court filing, the workers say Amazon reinstated warehouse productivity quotas despite telling a judge that it was suspending them during the pandemic. Amazon shares down by 2%. The sprint to find medical breakthroughs to contain COVID-19 stumbled this week as a pair of pharmaceutical giants, Eli Lilly and Johnson & Johnson, working to develop treatments and vaccines, suffered setbacks in the clinic. But that is not a problem, according to Lauren Sauer, an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
Yeah, I think it is a good thing that we're seeing this process play out the way we want it to, the way it's written on paper that it should. I don't think we'd want to get to the end of this process and have a series of therapeutics and vaccines that have seen no adverse events, because it means our threshold for what those adverse events are is not strong enough. And so what we're seeing is the process that's in place playing out the way it should to ensure that when we get to the end, we know that we have a safe and effective product that we can distribute to Americans.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Johnson & Johnson shares, they're trading a little change today, down 0.1%. Eli Lilly is down now by 1.3%. Recapping, equities lower with the S&P down 25, down 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. I appreciate it, especially that reporting on some of those vaccines and the trials and the stumbles that some of those pharmaceutical companies are having, because that brings us right back to our guest, Dr. Lisa Danzig, Chief Medical Advisor of the COVID-19 Early Treatment Fund, joining us on the phone from San Francisco. So, Dr. Danzig, as Charlie was just reporting, we've seen some high-profile vaccine trials and others over the recent days and weeks. Hit some stumbling blocks. Talk to us about that. How concerned should we be? How do you think about that? And does that make the need for therapeutics, not just vaccines, but also therapeutic testing, even more important?
Thanks, Paul. It's really important to put this into context. There have been over 1,800 registered studies of COVID-19 treatments, of which 1,052 are currently recruiting patients, 349 of which are in the United States. And it's not uncommon at all to pause studies because of events that happen that require further information. When you enroll a patient in a clinical study, they go through a process of informed consent, and there's always a line in the consent that says, we will inform you if we become aware of any information which may alter your willingness to participate in the trial, which may change our perception of what the risk is. And so it is normal when events that were unexpected occur in the trial for us to sometimes we stop and say, we really need to understand this. Is there anything there? We tend to be conservative as practitioners. We generally argue on the side of potential risk to patients. And so, I don't have any hesitation in pausing a trial to collect the information to make sure that my worst nightmare isn't confirmed. And then we will get and may proceed on the basis of data that we generate. We don't know what these events are that were in the news yesterday. We know that there's a data safety monitoring board that is reviewing data that recommended a pause. In the industry, that could be nothing. It could be a concern. The fact that other studies didn't stop, that's reassuring to me, because if there's something really generally of concern, they would have notified other manufacturers, and I don't believe that has happened.
So help me out here. Did you ever go to buy honey or teas? There's just such variety. I mean, you could pick a lot of consumer goods, and I guess I'm starting to get a little confused, Dr. Danzig, about, we're pursuing this global effort, multi-billion-dollar, trillion-dollar effort, it feels like, for a vaccine. But we're also increasingly, like the work you guys are doing, finding treatments for those who come down with the virus at an early stage, at a moderate stage, maybe at a severe stage. And I do wonder, is there a holy grail? Is there a cure? What is the end game here? Or are we going to need all of this in order to successfully get society back to normal?
Oh, we need all of it, Carol. I mean, the vaccine is a long road, and you're seeing why it's a long road. We can make our most aggressive time frames, but real life happens. The data may work the way we want. The virus may behave the way we expect, or we may get surprises. And in the meantime, 200,000 active cases in a day in the world, that's an alarming number. And even if a percent or a fraction of a percent has a bad outcome, that's a large number, and we want to prevent that. So if we've got something that turns the disease back into a cold, that prevents the inflammatory component, if we can get the holy grail, which is keep people out of the hospital and shorten their period of infectiousness, that impacts transmission. That kind of agent, I think we can see that on the horizon. By January, we may have tested reasonable combinations where we can start treating people to the point where it impacts transmission, to the point where your risk of going out is lower. And that's what we're working towards. We're working towards solutions both on the vaccine side and on the drug side, because not everybody will get a vaccine, not everybody will get a vaccine right away, and we don't know how long the vaccines will work.
And I'm going to ask the question that I know Paul's thinking too. It's and in the meantime, wear a mask, right?
And in the meantime, wear a mask, get tested, so that if you're positive, you can be isolated, and we can have contact tracing, and we can warn anybody else that has been in contact, so that they can double down on their isolation efforts and avoid downstream transmission. That's critical now. That's what we're seeing. We were worried about this Octubre second wave. It's here. It should not be a surprise to anybody that it's here.
Right. Page 1 of the playbook, wear a mask. Yep. Dr. Lisa Danzig, thank you so much. Chief Medical Advisor, COVID-19 Early Treatment Fund, CETF, joining us on the phone from San Francisco. Great conversation. All right, let's get back to World and National News headlines. Let's check in once again with Nancy Lyons in our 99.1 newsroom in D.C. Hey, Nance.
Hey, Carol. Judge Amy Coney Barrett has returned for a second day of questions from the Senate Judiciary Committee on a path likely to leave the Republicans with another Supreme Court justice and the Democrats with another election issue. Bloomberg's Irv Chapman with more.
The hearing began with Chairman Lindsey Graham taking a victory lap.
This is history being made, folks. This is the first time in American history that we've nominated a woman who's unashamedly pro-life and embraces her faith without apology, and she's going to the court.
Democrat Dick Durbin saw it differently.
You're making history. You're the first nominee for a vacancy on the Supreme Court to ever be considered in the midst of an election.
Judge Barrett again promised to keep an open mind as she hears cases on abortion, discrimination, health insurance, and possibly the outcome of the election. In Washington, Irv Chapman, Bloomberg Radio.
A new study shows Australia's Great Barrier Reef has lost more than half its coral in the last 3 decades. Scientists fear the loss caused by frequent bleaching will compromise its ability to recover. Terry Hughes is a professor for coral reef studies at James Cook University. He's the study's co-author.
The only way to turn the downward trajectory of the barrier reef around is to deal with the root cause of the problem, which overwhelmingly is global warming.
The Great Barrier Reef runs more than 1,400 miles down Australia's northeast coast, spanning an area half the size of Texas. It's listed as the most extensive coral reef ecosystem on the planet. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you very much. Really appreciate that. I have to say, Paul, anytime I hear those stories about the Great Barrier Reef, I dive, and it just upsets me.
Okay, yes.
And I've seen it. I haven't been to the Great Barrier Reef, but I've done a lot in the Caribbean and elsewhere. And just like in Grand Turk, like over a decade, the difference that I've seen in the reef, it really just, I find it devastating, upsetting. Let's talk about a story that's on the Bloomberg, and this, I think, is the other story, or one of the other stories when we think about the race for a vaccine. Yep, we got to get a vaccine. We've got the world's R&D and, laboratories and big pharma and little pharma all working on it. But you then have to think, Paul, about the distribution, and that is a massive effort. Really, a war effort is needed to do it correctly.
Yeah, and I'm not hearing rhetoric like that, like a mass mobilization that I thought we would be having those types of discussions here. You think about this a vaccine, and the science is one huge hurdle, and the scientists all around the world are working on that. The second hurdle that it's always, that it gets less attention is, the geeks that really run the supply chain around the world, the folks that get these packages all over the world in real time. Those are going to be mission critical people to get, and systems to get the vaccines and the treatments where they're needed most in scale that we've never even really thought of before. And I'd love to hear more discussion about that, more theories about it, and more strategies about how it's going to be implemented.
Yeah, we've talked with some of the manufacturers that are involved in some of that. But, you think about the list of decisions. I mean, each one on its own is just kind of a huge undertaking. But you've got to think about directing transport from manufacturer to hospitals, physician practices, and clinics. You've got to figure out who gets the first doses. That alone, I am waiting to see how that plays out. And then coming up with a strategy to convince increasingly skeptical citizens that the shots are safe, all with, unfortunately, very little guidance from Washington. And this is where, many would argue we need some leadership.
We need some leadership. I think many people have been saying since day one, this is a national problem. It requires a national response, and we arguably have not had one.
Yeah, instead we're getting 50 different training programs in 50 different states.
Yeah.
This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down Wednesday. U.S. stocks now trading close to session lows. Stocks are falling as stimulus hopes fade. The S&P 500 index slumping 26 points, down 0.7%. Stocks dropped after Treasury Secretary Steven Mnuchin downplayed the chances of striking a stimulus deal before the election. The Dow is down 185 points, down 0.6%. NASDAQ is down 110 points, a drop there of 0.9%. The NASDAQ 100 index slumping by 1%, and the Russell 2000 down another 0.8%. S&P, as I mentioned, lower by 0.8%. 10-year up 1/32 with a yield now of 0.72%. Gold's up 0.5%. 19.01 the ounce, and West Texas Intermediate crude up 2%, 41.02 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So leave it to the amazing editor of Bloomberg Business Week, Joel Weber, to come up with the perfect line to get into this next segment. We're going to do a walk around the block with our own Peter Coy, economics editor, because there's a plethora of stories from Peter that are so relevant to our world, including one that has to do with President Trump and some comments he made today. So let's bring in Joel Weber, editor of Bloomberg Business Week. He's on the remote access from Massachusetts. Peter Coy, economics editor at Bloomberg Business Week, also who's been working furiously on the phone from New Jersey. Joel, I love that. I just want to spend like hours with Peter Coy.
Yeah, well, maybe just a couple minutes for now.
Okay.
But because we gotta keep him working. The story that he just had a quick take on this morning was actually Trump speaking to the country's economic clubs, which I thought was actually kind of interesting. And Peter, what was your takeaway from getting to watch that?
Well, it's not his typical audience. It's a bunch of rich people, some of them richer than he is, generally prosperous business people who belong to the economic clubs in Washington, New York, Chicago, Pittsburgh, Florida, and so on. And he didn't seem as comfortable with that audience as one might expect, since they're mostly one-percenters who generally agree with the Republican agenda of tax cuts and deregulation. There were times when he sounded even a bit defensive and worried that he didn't have their support. He called out internationalists, lobbyists, drug company executives, all of whom we presumed were part of his audience.
Peter, what do we know about the president's current standing with big business, with Wall Street, with folks who benefit from the Trump tax cut?
Well, they like the tax cut. We've seen some pretty critical comments coming up from organizations like the Business Roundtable, which represents CEOs of some of America's biggest companies. And very often CEOs don't want to be on the line themselves criticizing any administration, Republican or Democratic, but they will sometimes hide behind the voice of a roundtable like that, so they can't be sort of safety in numbers kind of thing. And some of the statements from the Business Roundtable have been fairly critical of the president, and things like, why can't we get another round of stimulus done? So this was interesting. It continued that thing, and one of the things he said was, "Hey, I know some of you out there are Democrats, and I don't understand what you're thinking. Some really bad things are going to happen if Joe Biden gets elected."
So, Peter, that was obviously just this morning. The other story that you have in the current issue of the magazine is not about the president at all, but sort of another elephant in the room, which is the Fed. And I thought you had a sort of a big idea. You spent some time thinking about it, and it's ultimately about the Fed being basically the most dovish Fed in the history of the Fed. Can you tell us more about how why that matters so much right now?
But just a reminder, dovish means that you're soft on inflation and more worried about unemployment, or the hawk would be the opposite. And the Fed traditionally was hawkish. It was probably more hawkish than the president, whoever was in office at the time, or Congress. And it was almost designed to be that way because you wanted to have the central banker be the tough guy, the enforcer, the cop, who would try to make sure that the economy did not overheat and causing runaway inflation. But now we're in the opposite circumstance where we're actually worried about inflation being too low and the economy being chronically weak. And the Fed has moved around to being, and it's not just because Jay Powell is the chair of the Fed now. It was starting to happen under Bernanke and Yellen as well. But I think with the actions this past spring in response to the pandemic, and then now with Jay Powell jawboning Congress to do new stimulus, and the interest rates being at zero and the new dovish language coming out of the Fed in August, it does seem as though it's the most dovish Fed in a century, namely forever for the Fed.
Well, and it could work out, right? You kind of play out the dream scenario, Peter. You know, if all this messaging from the Fed works, I mean, right? The economy improves, workers get more money, consumers open up their wallets, you know, and we all live happy lives if it all works out.
That's obviously the optimistic scenario, that the stimulus works and inflation moves up to 2%, which is the Fed's goal, and maybe even goes a little above it. That's the new thing that the Fed is doing now. It's saying it can actually tolerate or even welcome inflation overshooting the 2% target to make up for periods of undershooting. And that's good. It could be very interesting to see, assuming inflation does eventually get over above 2%, whether the Fed will be so willing to tolerate that after all.
Well, you do wonder, Peter, right? Is that potentially then the Fed being irresponsible? Because, right?
Irresponsible is a funny word here, because Paul Krugman said that, you know, the Fed almost has to, or any central bank almost has to commit to being irresponsible. And by irresponsible, he means, you know, more willing to target inflation than a traditional central banker would have been.
Okay, Peter, we're going to change gears yet again because Sunday night we have some new economics professors win a Nobel Prize, and you also, I thought, scared up an interesting angle about that and sort of their work around auctions. How central of a contribution have they made to sort of what has unfolded in auctions that we see in our daily lives and others that we may not get to see as much?
We don't necessarily see the auctions that are happening for example, radio spectrum, but they affect our daily lives in a big way. That's how the government now gets frequencies into the hands of, say, cellular phone companies, operators, through an auction. It used to be that it would just sort of allocate them without making any money. So the two things happen. One is you make money for the taxpayer, which is $120 billion just from the radio spectrum, let alone other auctions. And second, presumably, if you design it right, you get the frequencies out more quickly, which means the innovation happens more rapidly, and you get them into the hands of the strong players who can do the most with them.
It sounds like some really crazy smart stuff from two folks at Stanford. Have I ever heard that before? It's an amazing story, and it really does make you think a little bit, you know, this idea of the winner's curse. I love what you go into, and we're going to put it out online so people can dig a little bit deeper into it. As we said, Wednesday in the Park with Peter Coy, a trifecta of incredible stories. Peter, always love checking in with you, so thank you so much. And check out certainly the current issue of Bloomberg Business Week magazine. Also go to Bloomberg.com. You can find more of Peter's stories for Business Week. Joel Weber, thank you to you, editor of Bloomberg Business Week, joining us from Massachusetts. Peter Coy, economics editor at Bloomberg Business Week, on the phone from New Jersey. What I find interesting, Paul, about his first story is just that we're seeing President Trump kind of pop up in a lot of different places.
Yeah, it's well, first of all, Peter's been probably the busiest person running around writing all these stories. But yeah, you're right, and you don't. That's typically not his audience here, this 1%. His audience tends to be the ones at his rallies where he, you know, his aides say he feels the most comfortable and can do the most good for his campaign. But you wonder if he's saying, hey, this might be my last opportunity, so let me get in front of these people. Right. And we'll see how that goes. And again, at Town Hall again tomorrow evening.
Yeah, we're going to talk politics a little bit later on. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that's coming up next.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, October 14th. We have got the Dow, the S&P, and NASDAQ close to lows of the day. In fact, the S&P right now bouncing off the bottom. Stocks dropped after Treasury Secretary Steven Mnuchin downplayed the chances of getting a stimulus deal before the election. Right now, the S&P is down 21, lower by 0.6%. The Dow once again negative on the year, down 139 points. It is down by 0.5%. NASDAQ is down 88, a drop for the NASDAQ Composite Index of 0.8%. The NASDAQ 100 Index also down 0.8%. 10 years up 2/32, 10-year yield 0.72%. Gold up $11.43 the ounce, up 0.6%. And West Texas Intermediate crude rallying now by 2.2%, 41.07 a barrel. The International Monetary Fund says more public funding will be needed to complete the economic recovery from coronavirus, joining central bankers and finance leaders who are urging governments to set aside fears about mounting debt for now. Kristalina Georgieva is the IMF's chair. She was interviewed this morning on Bloomberg Radio and television.
We are very concerned about the scarring this crisis is bringing. There are sectors of the economy that are very severely impacted. Low-skilled workers, women, young people, they are hit hardest.
And traders keeping an eye on those earnings reports, specifically from big banks this morning. Goldman Sachs Group joined other big banks in cashing in on continuing pandemic-induced volatility. As the firm's bond traders posted the biggest jump on Wall Street so far, Goldman Sachs shares, they're up now by about 0.2%. Wells Fargo profits slumped 56% as CEO Charlie Scharf took charges to address old scandals and began his job-cutting push. Wells Fargo down now by 5.4%. Just over an hour from now, we will be talking with Wells Fargo's CFO, John Shrewsbury. Also out with earnings this morning, Bank of America shares lower now by 4.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Under my continued leadership, we will continue our V-shaped recovery and launch a record-smashing economic boom. We will end the pandemic with a safe and effective vaccine, create 10 million jobs in the first 10 months of 2021, where we're going to have a phenomenal year, and we will soon be announcing, in my opinion, a phenomenal record-setting third quarter, and quickly return to full employment.
All right, that, of course, President Trump giving remarks today to the Economic Club of New York. We just talked about that with Peter Coy and Joel Weber. The president, of course, talking about the nation's economic recovery from the coronavirus pandemic. So how likely is this scenario that he has laid out in terms of the V-shaped 10 million jobs being created and a phenomenal record third quarter for companies and employment? Let's get into it in today's Business Week Economics segment. Let's bring in Bloomberg Economics senior U.S. economist Yelena Shaletyeva. She's on the phone in Long Island. Yelena, he's pretty optimistic, and I'm trying to counter that with another story on the Bloomberg that talked about a record number of U.S. corporate giants losing money in the pandemic. So when you hear that from the president, what do you think?
Well, I think he's right about the third quarter, but I'm afraid he's wrong about everything else. The third quarter will be a phenomenal growth quarter, I think. We are expecting 28% rebound in terms of economic growth, but that follows the 33% decline. So the swing just doesn't mean much in terms of what will happen in the fourth quarter of the year and going into 2021. Economic growth is slowing, and in the absence of any fiscal package, that will mean growth will turn negative in the first quarter of next year, according to our estimate. I think it's just a matter of the degree to what kind of fiscal package we will get. We will get it regardless of the outcome of the election. I think it will be bigger if the Democrats get both the presidential ticket and the Senate. It will be smaller otherwise, but I think the markets and economic data will push the policymakers' hand one way or another.
All right, Yelena, as I start to listen to some of these third quarter earnings calls, I guess what I'm hearing is a lot of questions about 2021. It seems like investors have almost written off 2020, haven't we all, to a certain degree? But you mentioned first quarter with no stimulus, negative GDP. How is your 2021 look for Bloomberg Economics?
So we expect a fiscal package in the amount of $1.2 trillion, and that will probably happen in the first quarter. Unfortunately, nothing before the election. And then, we'll continue to grow. It's just that the pace of growth will be relatively slow because we are not fully recovered from the virus itself. So a lot will depend on whether we get an effective treatment or vaccine. We expect growth in the vicinity of 3.5% next year, but that is predicated on some fiscal stimulus, and that is also predicated on the vaccine coming or an effective treatment at some point in the middle of the year. I think what's important to highlight is that there are a lot of risks around this forecast, and a mere resurgence of the virus, the lockdowns could mean a very much negative risk for the economy, and it's also like the lack of people's personal income growth.
Yeah.
So that will be, that will define what happens to the biggest sector of the economy.
All right. To be fair, we did get some big stimulus programs. We also had, the Fed constantly doing things to make sure markets were working well and doing what they could in terms of their, tool bucket. Having said that, what do we expect to hear from the Fed between now and the end of the year, between now and the election, or do they kind of lay low at this point?
They will probably lay low.
Yeah.
That they have done a lot, and they will see what happens over this period. So the FOMC meeting starts the next day after the election, and the FOMC statement is going to be published on Thursday of that week. So I think it's going to be a little bit too early to really make any conclusions about the future of the economy, so they will probably wait till the December meeting to do anything. If we are in a contested election or things like that. And
what can they still do at this point, though? What would they do in December?
More QE.
More QE.
More
Okay.
QE. So that's it.
Yeah, haven't heard of it.
Yeah, I haven't heard of that one. So, Yelena, I'm thinking at these job numbers. Jobless claims we'll get again tomorrow. The numbers, we're getting more jobs created, but at a slower and slower and slower rate, really calling into question the jobs market and the consumer. How are you guys thinking about it?
So we think that the progress in the labor market will slow down. We are not excluding a negative reading for the months of October in terms of payrolls. So, we have rebounded quite a lot, but growth in jobs have been slowing down. So, there are some seasonality issues also because at this point, the economy is expecting to add jobs at an increasing pace ahead of the holidays. But will we see that this year? Probably not. So we may see a negative reading when we get October payrolls.
Yeah, it's just nutty. It's just nutty at this point. All right, Yelena, thank you so much. Yelena Shaletyeva, our senior U.S. economist at Bloomberg Economics, on the phone from Long Island. But it was interesting, to be talking about this and then talking about, with Peter and the president making the rounds of the economic clubs. It's just interesting, right, at this point?
Yeah, I think, there's certainly, you talk to the bulls and the bears, there's certainly some compelling arguments on both sides as it relates to the economy. I guess the bullish case is there's a lot of stimulus in the market already. There's likely to be more. Interest rates are at an all-time, near all-time lows. We will get a vaccine, and 2021 will show growth. And that is kind of practical. That makes sense. But there's so many things that could go wrong in that scenario. And I think that's kind of why we still see the VIX up where it is, Carol. I mean, you never see a VIX at this level, or we haven't recently with the stock market performing so well.
Right, and we've seen days where the stock market heads higher and the VIX heads higher as well, and it just doesn't really make sense. All right, we're going to continue here on Bloomberg Business Week. Right now, though, another check on world and national news headlines, and we turn things over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Senators are still questioning Supreme Court nominee Amy Coney Barrett. Each member of the Senate Judiciary Committee gets 20 minutes to ask their last questions today. The confirmation hearings are expected to wrap up tomorrow. Democrats have pressed Judge Barrett today on her independence. She was asked if she thinks a president has the power to pardon himself.
That question may or may not arise, but it's one that calls for a legal analysis of what the scope of the pardon power is. So because it would be opining on an open question when I haven't gone through the judicial process to decide it, it's not one on which I can offer a view.
Chairman Lindsey Graham says he expects all Republicans on the committee to support Barrett's confirmation and all the Democrats to vote against it, as they argue the pick should be made by the winner of the presidential election being held in less than 3 weeks. Well, Facebook says it is reducing distribution of a New York Post story accusing Democratic presidential candidate Joe Biden of lying about his dealings with the Ukrainian energy firm Burisma. Bloomberg contributor and Iona professor Jeannie Zaino says the story lays out a couple of questions about the candidate and his son Hunter, who served on the firm's board.
That he tried to make the introduction while he was on the board, and of course also that Joe Biden, when asked directly whether in fact he knew anything about this, said he did not.
Facebook says it is slowing the spread of the story so that fact checkers can evaluate its authenticity. The Biden campaign is denying the report. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Paul Sweeney. And I want to talk a little bit more about what Nancy mentioned. Of course, right now, among the most read stories on the Bloomberg has to do with something that was in the New York Post, and we're going to talk about it a little bit later on. They talked about these unverified emails, and I guess they say they got it from Rudy Giuliani. But the newspaper's offering no proof that Vice President Joe Biden met with a Ukrainian businessman. We're talking about Burisma, and his son worked there, and it's just this whole story that's been a little bit of an overhang on Joe Biden, if you will, but all of a sudden it pops up in the New York Post today, Paul, and we've seen the Biden campaign come out and say, nope, there was no meeting with a Burisma official. And at the same time, you've got Facebook kind of policing these postings.
Yeah, Facebook slows the spread of the New York Post Biden story to fact check it, which is something they said they would do for certain types of content. And also I'm seeing a headline crossing the Bloomberg terminal. Twitter says the link to Post story is, quote, potentially spammy or unsafe. So here's social media companies, Carol, and we know how much pressure and how much criticism they came under from the 2016 election about allowing misinformation, perhaps Russian interference to get into the national discourse and to spread it. And so there's been a pushback over the last 4 years with CEOs, being hauled in front of Congress to talk about how they're going to combat it going forward, including this election. So maybe here's what we're seeing.
Yeah, exactly. Listen, and it's interesting. We've had a lot of conversations going on in our own newsroom about, okay, there's this report. You and I were talking about it earlier this morning. Yep. About, is it legitimate? What do we do with it? And it was certainly something that our terminal users were reading a lot about. But I do think it's interesting, especially for social media, because increasingly this is where everyone gets their news. That's how they get it. And so there's a responsibility to make sure that what's being put on those sites is factual. And if it's not, it needs to be noted as such. It certainly would be that way in traditional media. All right, you're listening to Bloomberg Radio.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are off session lows. Still a down day, though, for the Dow, the S&P, and NASDAQ. Bank earnings front and center. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the red today as stimulus hopes fade. Dow's currently down 87 points. Like you said, off session lows. S&P's dropped 14. NASDAQ declines by 62. The U.S. 10-year yield at 0.72%. Gold is higher by 12. Transports gain 118 points. And among the main 11 SP sectors, only energy, industrials, and materials were in the green. Leaders to the upside in the Dow Inc., Honeywell, and 3M, while UNH and Disney led to the downside. After those bank earnings, Wells Fargo fell 5%, Bank of America dropped 4%, and Goldman Sachs was little changed. In other news, WW International expanded their relationship with Zoom Video. And in deal news, Trayton's said their $43 a share Navistar offer is best and final. Navistar plunged 17%. Wrapping things up, Alcoa and United Airlines report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you very much. Appreciate that update. Time for the Bloomberg Green segment. It is brought to you by PGIM, the investment management business of Prudential. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. That's PGIM.com. All right, so you know, Paul Sweeney, I love a gut check, and we definitely got one this week from the International Energy Agency, and there were 4 big takeaways from their 2020 World Energy Outlook that was published yesterday. Bloomberg News sustainability editor Eric Roston has it for us. He joins us now on the phone in Montclair, New Jersey. Man, if we want to know where we are when it comes to energy and where we're going, Eric, we got it this week.
We sure did, and it's worth, for those of us who've been around the space a while, I'll just share this sort of internal monologue. Energy used to be the most plodding, boring, long time horizon, expensive, regulating topic there ever was. And for a couple of years now, really culminating with this IEA World Energy Outlook the other day, it is the most nimble, high-stakes, fast-changing, technologically infused topic around. And we see that in the report itself, which covers, among those 4 takeaways you mentioned, just the incredible difficulty of conducting long-term energy modeling during an energy transition prompted by climate change, but also this historically unprecedented pandemic situation. I'll finish at 4. We're seeing a continued decline of coal, which can no longer compete in most of the world with solar, which is cheaper than ever. Peak oil is still something people love to talk about, but don't have evidence for just yet. IEA says there's too much uncertainty in the years ahead, even though Executive Director Fatih Birol has said that growth is certainly likely to come to an end, at least as we know it, by the end of this decade. And then finally, all the uncertainties surrounding the energy path that we're choosing to be on, how clean it will be and how fast it will achieve that status.
I just think about all the books that were written with the title Peak Oil, right? Yeah. There was just a whole bunch.
Yeah, it's a phenomenally interesting topic from the science to the politics, and we'll still be talking about it for some time to come.
Hey, Eric, we're in the middle of earnings season, and companies are having a really difficulty forecasting, a quarter ahead, much less the 20, 30 years that the IAE tries to do. How did they caveat this outlook in a COVID world?
They did a very rigorous and very deep dive into that very question. Normally, when this product, this World Energy Outlook 2020, it's annual, the IEA's annual sort of long-term look, and there are every month, it seems like every week often, there are shorter-term products that focus on various fuels, on various technologies. But what they did for this longer-term view is they kind of threw up their hands and said, this is unprecedented. What we're going to do is we're going to set aside basically our main business as usual scenario, and we're going to do a separate scenario based only on what happens if recovery from COVID is slower. So to some extent, it's just the nature of this particular document that comes out every year that it has a sort of several years to a couple decades look, but they did try to struggle. They struggled with it and did try to come up with a range of predictions based on what if we get out of COVID faster? What if we get out of it slower?
So Eric, this is your world, man. You're reading through, researching, writing. Your whole team is on this constantly. What among these takeaways do you think is the most significant? And I think maybe to the Bloomberg audience who thinks about investment, they think about climate change, they think about all this stuff.
I think it's the continued inexorable rise of solar, the decline of solar prices, the decline in the cost of capital for solar deployment, which we're seeing all over the world, much cheaper in Europe. In fact, the cost of capital has become so cheap that revising their expectations was a key driver of the IEA's conclusions for how much solar there's going to be. Because the solar prices have fallen, anywhere from 20 to 50% more than they were expected to do a couple of years ago, the IEA's projection for solar penetration in 2040 was 43% higher in this year's report than it was in 2018.
Wow, that's big.
Yeah, no, the IEA. Sorry, go ahead.
No. I was going to say that seems pretty significant.
Oh, yeah.
Just quickly. We just got about 20 seconds. That seems pretty big, Eric.
Yeah, no, it's huge, and it shows much more, I think, rigor and an embrace of this new world by the IEA and their analysts.
Yeah, pretty cool stuff. Thanks so much for going down that list there. Eric Roston, sustainability editor at Bloomberg News, on the phone from Montclair, New Jersey, and you can check out that story. Just go to Bloomberg.com and also check all the work that Eric does at Eric Roston, actually E. Roston. Forgive me. I changed his Twitter handle. I can't do that. All right, you're listening to Bloomberg Business Week. Paul Sweeney, Carol Massar. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so Paul, you probably don't know this, but I'm a notorious cheater when it comes to the chart of the day. I'm constantly Googling to figuring out the sound. I mean, I knew Cher and I know a lot, but I don't know.
And you knew Stairway to Heaven.
I knew Stairway to Heaven. Sorry, Alex Steele. All right, anyway, we've got the chart of the day and Dave Wilson coming up in just a moment. Let's get back to your top business stories and just about 29 minutes to go in today's trading day, Charlie.
Indeed, and you guys both knew Dancing Queen. Proud of you there. Here's what's going on. We've got the Dow, the S&P, and NASDAQ all trading lower right now. Stocks dropped after Treasury Secretary Steven Mnuchin downplayed the chances of striking a stimulus deal before the election. Let's get right to the numbers. The S&P off session lows, but red on the screen nonetheless, down 11 now, down by 0.4%. The Dow is down 98. That's a drop of 0.3. And NASDAQ is down 53, a drop there of about 0.5%. 10-year up 1/32. 10-year yield 0.72%. Gold up 0.7%, 19.04 the ounce. And West Texas Intermediate crude surging 2.2% today, up 89 cents a barrel. 41, back above $41 now, 41.09 on WTI. A resurgent coronavirus is sweeping across Europe. France imposing new curfews in major cities, and the Dutch Prime Minister has ordered a partial lockdown. Switzerland is broadening rules on mask wearing. The sprint to find medical breakthroughs to contain COVID-19 stumbled this week as a pair of pharmaceutical giants, Eli Lilly and Johnson & Johnson, working to develop treatments and vaccines, suffered setbacks in the clinic. Johnson & Johnson shares, they're up today by just about 0.1%. Lilly, though, is down by 1.2%. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health. And on Bloomberg Television this morning, she told us health providers are definitely making strides when it comes to treating those COVID patients.
Better at taking care of patients who've been infected with the virus. And so perhaps outcomes are looking better. I don't think we've seen a lot of mutation in this virus to warrant saying that it's different or less deadly. But we as a system, especially a healthcare system, have gotten better at ensuring that when people get infected with the virus, they get the best care. We have new strategies for their care. We have new therapeutics coming online and getting them out of the hospital and safely home.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. After the bell, Alcoa and United. Again, recapping stocks lower, S&P down 12, a drop there of 0.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Paul Sweeney, and this is Bloomberg Radio. I almost feel guilty, Paul Sweeney, that Jason isn't here because he really likes Tom Petty.
I